Good morning, ladies and gentlemen. As we are about to begin, we would like to share some information with all the participants. All information relating to the forum can be accessed through a Pension Office mobile app and the Finance Forum website. To view the agenda of the day and the speaker's profile, please go to the event section on the mobile app. Also, if you require any assistance, please feel free to approach our officials. You may also send your queries through the online chat feature on the mobile app and the Pension Office website. Thank you.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. هو الذي أنزل من السماء ماء لكم منه شراب ومنه شجر فيه تسيمون. ينبت لكم به الزرع والزيتون والنخيل والأعناب ومن كل الثمرات إن في ذلك لآية لقوم يتفكرون. وسخر لكم الليل والنهار والشمس والقمر والنجوم مسخرات بأمره إن في ذلك لآيات لقوم يعقلون. وما ذرأ لكم في الأرض مختلفا ألوانه إن في ذلك لآية لقوم يتذكرون. صدق الله العظيم.
Assalamu alaikum and a very good morning. Today's event will be hosted by myself, Aishat Raya, along with my colleague Zakin Sahib. On behalf of the Maldives Pension Administration Office, I would like to extend a very warm welcome to all our distinguished guests to the Maldives Finance Forum 2022. The forum commenced with a recitation of Holy Quran by Ms. Mariam Shamha Ismail.
Maldives Finance Forum is an annual event organized by Maldives Pension Administration Office to bring together national experts from business, finance, politics, academia, and social protection to deliberate on issues, promote views, and share experiences for the development of the Maldivian financial sector. Today, we are hosting the 9th Annual Finance Forum after a 2-year hiatus following the COVID-19 pandemic. The theme for this year's Finance Forum is Financial Infrastructure Development in the Maldives. We will be focusing on understanding the current infrastructure of the country, providing updates and information about recent developments, and creating a dialogue about the adequacy of and further developments required to establish a well-functioning financial system here in the Maldives. We are certain that the presentations and discussion scheduled for today will be thought-provoking, valuable, and engaging. The main sponsor of this forum is Bank of Maldives, and the co-sponsors are Maldives Finance and Leasing Company and Maldives Islamic Bank. We will be starting off the event with welcome and introductory remarks by Chairperson of Pension Office, Dr. Ahmed Dinaz. Ladies and gentlemen, please welcome Dr. Ahmed Dinaz.
Bismillah ar-Rahman ar-Rahim. Every such occasions, I normally get a lot nervous, so let me just ease a bit. I think it's important that we remember that this is a dialogue, this is a discussion, so we try to relax. Let the formalities, the initial part gets done. Honorable Chief Guest, Governor Ali Hashim, distinguished delegates, ladies and gentlemen, Assalamu alaikum, and a very good morning to all of you. I'm delighted and deeply honored to welcome you on behalf of Maldives Pension Office to the 9th Annual Maldives Financial Forum. From its launch in 2012, I believe it was here as well. I was quite honored to be part of the panel discussions at that time during Manik's CEO time, with the vision to create a platform for high-level discussions on the development of the financial sector. The Maldives Financial Forum has been instrumental in holding fruitful discussions on creating a conducive environment for financial institutions, particularly on matters concerning the growing pension fund and capital market. Similar to past forums, this year's forum is also organized under the theme that we believe is of national significance. The theme for this year, as said before, is financial infrastructure development in the Maldives. Through this theme, we aim to focus our discussion on existing financial infrastructure of the country for the ongoing development efforts and further development required to establish a well-functioning financial system in the Maldives. Given the fast pace at which our country or the economy is expanding and the growing dependency on the financial sector, all the financial institutions alike are looking forward to meet the growing demand for faster, better, safer financial transactions, establish standards and best practices, accurate and timely information. Distinguished guests, if we look at the need specifics that is specific to us, Maldives Pension Administration Office, being the institution responsible for managing the National Pension Fund, which currently stands at 19 billion rupiah in terms of asset value, and growing exponentially, are in need of services that are to cater its pensioners. They are contribution collection from and payouts to members scattered across the country, custodian services for growing funds, legal framework and systems to cater for investment operations, all of which are crucial for effective functioning of a pension scheme. We believe that these concerns and other similar issues faced by financial institutions can be addressed by upgrading and modernizing our financial infrastructure. This includes working on establishing platforms to connect financial service providers, an efficient payment system. I believe MMA is currently working very hard to establish, comprehensive legal framework to support and enable financial institutions to operate and explore innovations and advanced solutions. Let me pause a little bit on what has been written for me. But I think what is critical for us to understand, there are three pieces that are important, is trust, that we build trust we build trust to the institutions as well as trust within the institutions. Second, we also need to establish a culture of innovation. We also need to expand on and create room for dialogue despite any difficult circumstances nationally or internationally. So these are three key things that I would perhaps leave to the audience today while we are discussing on. Our progress in terms of modernizing and upgrading national payment system for a safe and robust payment infrastructure and efforts to strengthen the legislative framework of financial sector proves that we are heading in the right direction. To accelerate and improve the progress of these developments and forge a future that we deserve to the Maldives, financial sector and our institutions need to work together and do our part as stakeholders. It is my sincere hope and belief that this forum will help us to hold such fruitful discussions to this effect. Ladies and gentlemen, the audience of today's forum is represented by heads of important institutions, private sector and public sector. This shows the commitment to work for the development of the financial sector. You have taken a day off to be here, and I hope that you would engage with each other inside and outside the forum. I am actually extremely grateful that Governor Ali Hashim took the time out of the busy schedule to grace the occasion and agreed to deliver the keynote address. I also make a special note to all the other, if I may not mention all the names, but I'm especially grateful that all of you made it to the forum. Thank you. I would also like to thank the sponsors, the partners, the CEO, and the CEO's team at the Pension Office to make this forum a reality. I hope you will find this year's forum worthy of your time and taking back with you ideas and also a lot of fun time that perhaps some disagreements, some agreements that how we can work together. Please have an excellent time with us and enjoy the upcoming segments. Thank you.
Thank you, Dr. Inas. We are honored to have the Governor of Maldives Monetary Authority, Mr. Ali Hashim, as the chief guest. I kindly request the Governor to address the forum. Governor Ali Hashim.
Bismillahir Rahmanir Rahim. Distinguished representatives from the financial sector, our financial specialist from the World Bank, Mark Davis, officials from the Ministry of Finance and the Ministry of Economic Development, innovators and leaders of the private sector, Assalamu alaikum, and a very good morning to every one of you. At the onset, what I would like to do is thank the Maldives Pension Office for inviting me to deliver the keynote remarks for this event. It is indeed an honor to address such a prestigious gathering of technical experts from the financial sector and the social protection sector, as well as policymakers, business leaders, and intellectuals who share a passion towards working the financial sector of our industry. As Dr. Inaz has mentioned, yes, our intellectual capacity will be well spent here today to start that dialogue within ourselves, though with some disagreements. As you know, we always have disagreements, but that at the end of such disagreements, we will have a good dialogue and an output to the sessions that is planned forward. In 2020, We witnessed a severe macroeconomic contraction following the COVID-19 pandemic, with lingering effects still ongoing even to this day. Renewed concerns have surfaced regarding economic diversification and has further highlighted the dependence of our economy on tourism and related sectors such as transport and communication. Nevertheless, during such challenging times, the financial sector not only remained resilient in the face of the severe crisis, but also provided crucial support in maintaining macroeconomic stability. In Washington, it was noted by other governors as well that during the crisis, the financial sector was not considered a key service for the economy until the crisis happened. Only then, we experienced the same thing in the Maldives as well, where we were not considered when there was lists made and there was the total lockdown. We were not considered essential services until few days into the COVID lockdown. We had to convince our superiors, we had to convince the political leaders that without financial services, the economy will not function. It is one of the key essential services. As such, while the financial sector's contribution to national output increased by 17% over the period from 2019 to 2020, the total lender by the sector increased more than 10% over the same period to reach an estimated total of Maldivian rupiah 31.9 billion. This is truly, truly remarkable by any metrics. In any economy, a well-developed financial sector facilitates economic activities. The financial sector drives resource allocations by evaluating, diversifying, and mobilizing savings towards funding projects. Moreover, the sector is also entrusted with monitoring the activities of investors and risk associated with such activities. While these functions highlight the importance of the financial sector, empirical research also backs those findings. Backed strongly by empirical literature, not only do countries with better developed financial systems witness a faster pace of growth over a longer time horizon, but also this effect is causal. It is a direct result of the financial infrastructure, which tells us that development of the financial sector contributes directly to economic growth. Currently in the Maldives, our banks remain highly liquid and well above the statutory requirements, with the average capital adequacy ratio above 40%. Moreover, with total asset base of over 24 billion as of December 2021, other financial institutions remain a rich source of long-term, high-quality investments. Despite this, we continue to face major bottlenecks in the form of high financing costs within the traditional lending institutions. It's been talked about in the public, it's been talked about in the parliament, but this is a concern among us. And this hinders the expansion of financing of new private sector ventures. It is our firm belief that developing the financial infrastructure will undoubtedly aid in reducing the cost of financing, while also allocating capital in more efficient manner across the economy. Against this backdrop of the financial sector resilience and amid this lingering pandemic that continues to grip our economy, this brings to the forefront the importance of sound financial infrastructure as a key component of finance sector development. It is vital to assure that efforts are made by both the private and public sectors in the development of financial infrastructure necessary to foster growth. In this regard, the key areas that require our focus includes surrounding the legal and regulatory framework, which is lagging quite behind, the information infrastructure, which is also in its nascent stage, the liquidity and safety net facilities, as well as the clearing, settlement, and exchange systems, to highlight just a few of the infrastructure necessary. Given the key areas of focus that I have mentioned, together with the importance of building the resilience of the financial sector further, this year's Finance Forum, the theme of it, financial infrastructure development in Maldives, could not have been timelier and more relevant. Let me take this opportunity to dwell briefly on some of the recent efforts made by MMA towards strengthening the financial infrastructure of our economy and moving towards digital alternatives. Currently, work is underway to enhance the functions and legislative framework of the credit information system, which is aimed at aiding the financial sector in making more informed credit decisions. One of the ideas that was discussed that the credit information system would have data from the ISPs, would have data from the utilities as well, so that a credit rating system could be established within the Maldives. That's a long-term goal because of the financial regulations that need to be built around that concept of it. In addition, we are also working towards finalizing the legislative framework surrounding the Secured Transactions Registry for movable properties to facilitate and encourage the availability of loans and other forms of credit facilities. Also, efforts are being made toward creating a more enabling policy environment for Islamic finance products. Lastly, regarding the long-awaited instant payment system that was talked about with Dr. Inaz as well, and this has been, it's always on the public news as well. This is expected to facilitate innovative, convenient, inclusive, and affordable access to digital finance services. The infrastructure setup and the initial deployment of the solution has been already completed in 2021. Now, together with the payments infrastructure will come a digital ID to facilitate eKYC, which will be supported with a new regulation that was drafted and shared among our key stakeholders. So the draft is out there, and hopefully we will work towards an eKYC. I think this will then pave the way for the implementation of a single KYC that you have been talking about. Currently, user acceptance testing is ongoing with several banks. Some of the bank CEOs are here, and they would be telling you that the UAT is ongoing, which we hope to complete over 2 cycles, and in time for pilot testing, which we aim to carry out in December 2022 or early next year. So once the UAT is over, and then corrections are made from both sides, from our side as well as the bank side, we will hopefully go live soon. That day, ladies and gentlemen, is finally here that we've been talking. I know it's been taken such a long time, and it's the work of many. And yes, the banks, us, we are all working hard to make sure we deliver this. Ladies and gentlemen, we often hear, never waste a crisis, because it provides an important opportunity to change the direction of policy agendas and to accelerate the implementation of more innovative reforms that generate faster and higher growth. This is the moment. I've met one of the governors of the neighboring countries who said that we have to take these decisions while the time is right. If you wait for a longer period of time, you are going to suffer the consequences that you cannot then pull back, and the consequences can be very dire. So take the chance now, make the reforms, and let's go forward. For a country like the Maldives, the threat of widespread devastation from climate change is ever present. I have to say that. It has been said And one of the themes that during Washington, one of the themes was that we move towards more climate-oriented financing instruments. As a regulator of banks and financial institutions, a key objective of MMA is to maintain financial stability through identified risks to the financial system, assessing its capacity to cope with the threats, and implementing policies to safeguard the financial system health. Therefore, I believe that it is imperative to understand how climate change may pose risk to individual banks and to the financial system as a whole. Hence, this forum provides an ideal platform to identify, measure, monitor, and manage the financial risks of climate change. Ladies and gentlemen, the growth of the financial sector through improved and enhanced financial infrastructure holds a considerable promise for our country, particularly in terms of economic growth. We are on that trajectory right now. High-quality research in this area and the deliberations in this seminar will undoubtedly help us in recognizing impediments and generating innovative solutions to the key issues we currently face, and then illuminating our way forward. As I conclude, I'm hopeful that Maldives Financial Forum will continue to provide an effective avenue that intensifies the engagement of the industry, as well as government agencies, through sharing information and experiences, while also deliberating on tackling the key issues in the financial sector in a more holistic fashion. I wish you all success in your deliberations, and thank you for listening. Thank you.
Thank you, Governor. Next, I would like to invite our CEO, Ms. Sujata Halim, to elaborate on the topic, Importance of Financial Infrastructure and Challenges for a Growing Pension Fund. Ms. Sujata Halim.
A very good morning. I guess the formal part is over now. We're getting into the discussions. So let me start off on my topic. The financial infrastructure, of course, has a huge impact on a fund like pension fund. We are seen as the biggest institutional investor in the country. That's one of the reasons why we have selected this topic for this year, because as we are trying to expand our investment horizon, it becomes very important to talk about the challenges we face so that we can deliberate and find solutions for it. Just to run through what we do at Pension Office, as we all know, we had a major pension reform back in 2008, 2009, where the existing pension was converted into a modern pension regime with a multi-pillar system, which has a defined benefit scheme for the elderly and a contributory scheme, which is for all of us who are working. The main reason for the reform was to have a fully funded scheme so that it could be sustainable, sustainability being the main factor here. In a retirement pension scheme, a defined contributory scheme, the main retirement benefits are generated from the contribution, the period of contribution, and most importantly, the investment gains. So this is the reason we need to talk about how we can expand the investment regime and how we could get the best benefit for our members. Looking at the present composition of MRPS, we have about 2,000 employers registered, contributing for over 116,000 members. We have about 175,000 RSAs with us, and only about 1,600 beneficiaries from the current scheme. It is a very young scheme as of now, growing. And looking at the age profile of the members, you see that most of our members are between the age group of 25 to 45, giving us a good investment horizon of about 30 years. So we have to make use of this long horizon and get the best yield for our members. The MRPS fund has been growing at a very good pace. We've been growing at about 13% per year, and the fund size is about 15 billion right now without the accrued rights. With accrued rights, it's about 19 billion fund size right now. And till 2019, the contribution grew at an average of 7.8% annually. This has definitely dropped during COVID, but we have now reached pre-pandemic level. Right now, our average monthly collection is about 122 million per month, which was 105 during 2021. The assets under management, the 15.3 billion that we have, most of it is invested in government sovereign instruments, 65% in short-term investments. This is what we want to change. We need to move this into longer-term investments. And we have only about 4% in equities. We've been striving to invest in long-term securities with long-term value creation. Right now, the investment objective is to preserve the capital and to get a rate higher than the domestic inflation. But this is the situation right now. We want to grow the fund, go in for longer-term investments, and get better returns for our members. We have been actively trying to pursue investments since MRPS came into existence. There has been 5 IPOs, of which we have participated in 3, which is about 60% of the equity listing. We've tried to capture as much as possible. Debt listing also, we have participated in almost all the publicly issued debt, and we have about 50% of the issued market share. Right now, MRPS subscribed about 13.5 billion to government debt instruments, and which is about 30% of the domestic debt right now. And then we have the private sector debt instruments. MRPS has about 549 million, which is about 60% of the issued debt. When you look at the OECD numbers, the returns, actually we are getting about 4.5% return, inflation-adjusted return, which is better than the OECD countries. The average is about 3.5% in the OECD matrix. And if you look at the countries, a big share of the investments are in T-bills, bills and bonds. However, now we are diversifying into equities. Asset allocations of pension funds has been in about 21% in equities and 52% in bills and bonds. With, however, as you see, in this since 2010. Now we're trying, the OECD countries or the pension funds are trying to expand the investments from 18% in alternative investments. They have moved up to 23% in alternate investments in 2020. As pension office, while we consider our investments, we look at various factors because we have to be extremely careful in investing member funds. Some of the things that we look at are the growth perspective of the company as well as the industry, the financial soundness, profitability, and the cash flow options, the liquidity, the investment risk, the liquidity requirements. In case of debt instruments, we look at the capacity of the company to service the debts and the governance structure. Now, prior to having this finance forum, we did have a technical discussion where we had technical experts from almost all the institutions present here get together and discuss the challenges. And in this, we identified the proper framework of governance or disclosure requirements or dividend policies. These are lacking or not properly developed as yet, which causes a very big hindrance for an institutional investor like us to actually evaluate the companies. So these are areas we need to look at and strengthen. If you look at the financial market infrastructure, some of the main components are still in a very nasal space. If you look at the custodian services, there's only one licensed custodial service provider. Financial advisors, which play a very important role in a developing investment horizon, who can actually play the intermediary role of advising and actually channeling the savings into investments. There are no established or advisors with a track record that we can depend on, which is another hindrance that we face. External asset managers are also not, their regulations are not fully developed. And if you look at valuation providers, obtaining an independent valuation of securities is a big challenge for us. And there are no research agencies which does the independent research of inflation, the price movements, or things like this. And also, so all this together, actually, for we as an institutional investor, we have to go through all these things on our own. Like, it's one institution doing everything, which would actually have a huge impact on our decisions. If these informations are available, if this could be developed well, it would definitely help for us to go in for more riskier investments, to take a step forward. There's definitely work ongoing on these areas. We need to pace up and deliver faster. Definitely there's good amount of work going on these areas. The payment system, I think we've heard of it. Definitely that's something we're looking forward to, which would help us again. And then the market structure, again, when you look at the capital market, the few companies that you have are mostly SOEs, and majority holding is in the government. So there's no float. There is no room for trading these. There's no liquidity. Which is, again, for us, even if we invest to exit, becomes a problem even required. So these are things that we need to change. We need to think of not having only SOEs listing and not having the government major holdings in this, so that we can actively trade in the market. Well, as we all know, we have heard this in the keynote as well as the chairman's opening remarks. For an efficient financial system, we can influence long-term growth and channel the savings into productive areas of investments. Pension Office aims to rebalance the portfolio towards its target. Our strategic asset allocation is definitely not the way it is now. We have more towards the growth assets, but right now it's mostly in treasury and shorter term investments. This can be done in the most prudent manner with the adequate due diligence processes and sufficient information to qualify risk and price investment instruments. So as the market grows, we will be able to expand our investments. That is the reason why we are having this topic for this forum. Mainly all the stakeholders, all the policy makers can actually think about. I think everyone agrees that pension funds are usually used for nation building. And it plays a big role in the capital market development. But it cannot be the only one. We need other areas to develop. We need other players to come into the market. We need to grow together. It's a small economy. We can do this together, and we are striving to do this together. With that, I will conclude my presentation. Thank you.
Thank you, CEO. We'll now take a small break. Tea will be served outside the hall. We would like to request the chief guest, all the speakers, panelists, and the board members to stay back and join us for a photo session. We inform that we'll resume with the next agenda item at 10:30. Welcome back. Our next presentation will be on financial sector developments by debt management expert from Ministry of Finance, Mr. Abdullah Hassan. Please welcome Mr. Abdullah Hassan.
Yeah, Assalamu alaikum. Good morning to all. Thank you, Maldives Pension Administration Office, for organizing such kind of forum, and this is a very good initiative. And since it's the 9th time, I think Pension Administration Office is quite committed to this, and bringing all the sector experts into one place, and also talking about the future developments, what we are doing now and what we are going to do next. Definitely will make the way forward for the forward development of this sector. And I will be purely talking about the financial sector in the perspective of fiscal policy and also at a treasury point of view, rather than a market participant. We are one of the biggest supplier of debt capital instruments to the market. And definitely, the Treasury has a huge role to play in this particular sector. And when we talk about the financial sector, and there are 3 key pillars to this particular sector, one of them is the financial institutions. And this actually includes the regulatory bodies, the central bank, the Ministry of Finance, all the banks, the insurance companies, and also the private players who are coming to the market to trade the financial instruments, and also to facilitate the financial instruments. The other one is the financial markets. We are talking about the equity market, share capital trading. We are talking about the debt instruments which are listed, or which can be listed and which can be traded. We are talking about the secondary markets. We are talking about the commodity markets. We are talking about the currency and money markets. And I will be touching a little bit on the financial markets as well as some of the financial instruments. And also, one of the other key pillars is the Treasury. The reason why Treasury becomes a pillar is because the size of the portfolio is so huge that actually it has an impact to the financial sector. Currently, GDP is around 100 billion. But the Treasury securities issued to till date is around 34 billion, which makes around 33% of the GDP is in government securities. And the broad money is, I think, around about 50 million. 34 billion is in government securities. So it's a huge portfolio. And as we have seen in the previous presentation given by the Maldives Pension Administration CEO, we have seen that about more than 50 or close to 60% of their portfolio is actually in government securities, especially short-term securities and with long-term bonds. So Treasury plays a huge role in developing this particular sector. Information, it includes the government security issuances. So it's on their website. It's available publicly to make use of those information. And we actually thank the central bank for doing such a good job. Here I would like to highlight that actually when we talk about the financial sector, financial institution is one of the pillars. And the banking is one of the main institutions in the economy. And we have heard even today that from the governor, actually, when the pandemic was hit, the banking sector played a huge role in surviving the economy. And in fact, that's one point that we sold to the investors when we went to the market during a pandemic, when our borders were closed, when our revenues were hit by more than 50%. The only thing which actually kept the economy alive was we had a very good capitalized banking system in Maldives. We were able to sell these particular points to the investors. They trusted our banking system. We are seeing this from the numbers. The capital adequacy ratio is 52, while the Basel III Basel III requires 6 or 8%. We are well above, and we are labeled as a very well capitalized banking industry. And non-performing assets is at 6%, one of the reasons why our cost of capital is high. But still, we are coming from a very high figure, actually. In 2017, if I remember correctly, it was around 11%. And the non-performing assets are actually improving. Today, it's around 6.1%. And this actually tells us that our market, the financial markets, moving to the right direction. So businesses are doing well, economy is doing well, and people are able to meet their debt service, though on the market instruments. And the liquidity ratio, this is the liquidity with respect to the total assets. So high liquidity assets with respect to the total asset ratio is 45.2. So we have a well liquid banking sector. And also, if we check the overnight, the deposits which are parked in the overnights, I think the most recent figures published by the central bank is around it crossed 4 billion. So we know there is liquidity in the market. Yes, we do talk about the private sector crowding out, because there is so limited funds available in the market where people where the government and the private sector actually run after. Even the pension fund is one of the suppliers of these funds, run after the same funds. But still, I think we have liquidity, and there are many ways that we can actually increase liquidity. Basically, yeah. So I will today focus on some of the institutional developments to the financial sector, and when we talk about the institutional developments, it's important to know I'll be more focusing on the treasury side developments rather than the financial institutions, banking sector, or the Maldives or the funds, including the pension funds, because I think the CEO has already given a very good presentation on the development of this area and also the expectation of the market. So through my presentation, actually, I'll try to address some of your queries raised or concerns raised. It's a concern, actually, of course, regularly pension office they are one of our biggest investor. I think the most biggest investor in the treasury is the pension office, and there is the banking sector. Combined banking sector is, of course, much higher. We have been getting their request to actually convert their portfolio into much longer term tenors. And Ministry of Finance is actually working on extending the treasury portfolio to a longer term tenor. In fact, when we publish our debt strategy this year for the year 2023, we have included to convert 20% of the net issuances for this year to a longer term tenor. So it's an exercise that we will be focusing on the year 2023, and definitely we will be able to succeed. We want to definitely reduce the risk of the portfolio risk of refinancing, and I'm sure Pension Administration Office or the pension fund is an instrumental fund that will help us to achieve this. The developments in the regulatory authority, I'm sure we have seen one of the most important change that is going to come is the national payment system and also the instant payment system, which Governor has given very good news for us. Yeah. On the treasury side, one of the most recent developments that we have brought is actually the centralization of the security issuance. Now, there is a central unit in the Ministry of Finance to issue the treasury bills, treasury bonds, and some of the Islamic instruments. And we have also reduced the denomination to 10,000 rupiah local currency. Now, if anyone have 10,000 rupiah, actually can buy a treasury bill. There's nothing stopping you to buy or to invest in treasury bills if you have 10,000 rupiah. The regulatory framework is there. We have the systems, though it is a bit manual now, but definitely the reason why we are not actually going in the public and advertising these things is we don't have an automated systems to do it. But on a manual process, we have been catering the individuals who wish to invest in treasury bills. There is a huge mega project that we are undertaking, which is the central deposit system. This is the project actually started or initiated by the central bank, and now later on with the function of issuance bring into the Ministry of Finance. Ministry of Finance is undertaking the project now. The reason why we are doing it is because if we want to take the largest portfolio, debt portfolio of the country to the secondary market or to the stock exchange, we need to have this particular system. We need to have a central depository system where people can, where we will have the primary dealers and where we will have the secondary dealers. Or primary dealers will be selling their securities in the secondary market. So one of those who are a little bit new, I'm sure you all know what Treasury bill is, but I'll just to give you an explanation on what Treasury bills and what is the role of Treasury bills. The Treasury bill is basically, it is quite different from a conventional loan. It is categorized as a security. It has a lot other properties than a loan. So it's difficult to transfer your loan to some other person. But security, it is a certificate that you are holding just like a bank note. But it's a treasury note. You can transfer the note to anyone. So it's at an agreeable price, you can transfer the note to anyone. You don't have to hold it to maturity. And then the treasury bills, the other important function of a security is that you can pledge this particular certificate as a mortgage. If you are actually borrowing from, or if you want to raise capital from another source, you can pledge a treasury security as a security, as a mortgage. So it has benefits, and that's one of the reasons why there's a whole market around trading these securities. There are securities which gives fixed income, and fortunately, in Maldives, we have all fixed income securities at the moment. We don't have any variable securities. To further develop the industry, actually, in the matured markets, treasury securities are usually issued at auction rather than TEP system. The current system that we have, a TEP system, which means Ministry of Finance or the Treasury announces a particular amount that they want to raise, and they ask, and the price will be given. And the price, and I have a slide which says the price. It's about 28 days T-bill is around 3.5%. So the rate is given, the tenor is given. So if anyone wants to participate, it's a public offering where it is announced in the Ministry of Finance website. The invitation will be uploaded. So anyone who wishes to invest have to register and also submit a subscription form. So for further development, the question is, do we need an auction system or do we need a system? We have seen that in the most matured markets, an auction system is used, which means that actually people or the investors give the price and the Ministry of Finance decides whether to take it. So it's just demand and supply determining the price of the security or determining the yield of the security. We tried this back in 2010. By the way, we started issuing treasury securities in 2006. We actually, by studying and by analyzing, we changed to an auction system from a TEP system. The result was definitely severe to the treasury, but it was very beneficial to the investors. The rate actually went from 3% to 11% in 12 months. The yield of the security went from 3% to 12% in 12 months. Definitely it's a huge jump, which the treasury definitely cannot bear the cost of it. So that's the reason why, though it's a step forward to market developments by changing it to an auction system, but we had to take a step back to change back to the old method, which is a TEP system, which we are practicing as now, because the rates went high. There are several reasons why actually the rate increased, and that's one of the questions that I want to float here today. So are we in a place to go for an auction system now or in the medium term or in the long term? Will we be ever able to go for an auction system like the developed economies works? So one of the challenges or one of the reasons we believed was the size of the financial sector was small. There are few players in the market. So that's one reason actually why they are so easily they can collaborate with themselves to increase the rate. So are we mature enough to consider going for a system like auction system today? And it's a question that I would like to float here today. And secondary market operations, we haven't listed our securities in the stock exchange now. We are doing the preliminary work, and hopefully we will be able to list in the medium term, if not the next year. So secondary definitely when our securities goes to the secondary market, then the investors can buy them online, and then they can sell it online by using applications like how we see how this trade of securities, shares, and also certificates happens in mobile applications. Yeah, this is the financial instruments. We have the treasury bill. 28 days is, as I mentioned, is fixed rates. 28 days is 3.5%, 3 months is 3.87%, 6 months is 4.23%, and 1 year is 4.6%. This is the yield curve we have for now. It's an artificial yield curve because it's not being traded in the secondary market. And actually, because of this, the interbanks are finding difficult to have a rate for interbank lendings. This is the only reference rate they available apart from the overnight rates, which is 1.5%. So with the secondary market, we can actually develop a yield, and the treasury bonds, 5-year bond is around 5.5%. And recently, we have introduced actually Islamic treasury bills. I know some years back we started some of the Islamic treasury operations, but which are not really a treasury instrument because it was channeled through the public bank accounts to an SOE to finance some of their business activities. But we were able to introduce our Islamic instruments last year, and we have been issuing, and Maldives Islamic Bank is one of our biggest investors in Islamic finance. The reason why we did it is because an Islamic bank who only have a Sharia compliant portfolio, there is a very limited opportunities for them actually to park their excess liquidity. So that's the reason why we try to introduce an Islamic treasury bills, and we are further developing. We have some challenges at the moment, but still we are trying to further develop these industries. And apart from this, we also have on the financial sector, we have the open market operation instruments, and as of now, I think temporarily the regular open market operations are on hold, but still we do have the overnight facilities going on. So we already heard this, digitalizations and financial sector development cannot be achieved without digitalizations. So we have mobile applications developed by the banks, and also our stock exchange, they have, and almost all the financial service providers, they do have the mobile app. And digital wallets are being introduced. There are, through the national payment systems, there are some of the parties, individual parties, including the Urdu, Dira, they do have the digital wallets, and it will be on an increasing trend. And then the national payment system and the instant payment system is coming. The point is that with digitalizations, we are able to address some of the key challenges that we had before. One of them is actually the counterfeit notes. If we are not circulating notes, then the fake notes will not be in the market, so it can be addressed. With the digitalization, we stop the issuance of the checks, so the fraud on the checks related things are not there. But today there is a new era. The scams, every now and then we hear a news about these scams happening. So with the digitalization, of course, it comes with a risk. And today, one of the questions that I would like to float to the audience is that, are we really ready for digitalizations to put all the financial assets on mobile applications and digital platforms? So are we really ready for that? What kind of threats we'll have? What kind of criticism as a person who really supplies these instruments and protect the information of the customers will have, as some of the banks today being criticized, though it's really not their sole reason for such kind of scams. But this is a question that we need to ask before we put all our securities, before we put all our shares on an online platform, before actually we try to have the national instant payment systems that we are trying to bring today. So if all these assets are on a digital platform, and if a password or token is compromised or email address is compromised, if these assets gets wiped out, and there is a little chance of recovering those things, and then it's a serious question that we need to ask today. Actually, I will skip some of the things that I'm going to talk because I think my time is running out, but I'll just rush now. So it's the financial markets. We are talking about the debt capital markets. We have seen that we have quite few debt instruments which is listed in the debt capital market, but it's not being actively traded. There is no secondary market to trade them even. So after having that, so the transferability is not really happening. Then we have the equity market. The stock exchange has done quite a good job in the recent years to make it digitalization and easy to access to this equity market. But the problem is, it's not active, it's not trading very high, the liquidity is not there for some reason. So again, I would like to float this question, so what can we do to further enhance the equity market? So what is really missing? So there's only 9 listed companies in the stock exchange, but there is quite a number of profitable companies in the Maldives. So is it the number of companies which is limiting it, or is it difficult to get the shares of those companies which are making profit? So still, I would like to float this to the audience to consider it. So money market is, again, a very infant stage in Maldives. As for even the currency, we have a peg exchange rate. Though it can be flowed within 20% of or 20% range, the peg has almost remained at 50. The official peg has almost remained at 15.42, though a parallel market has a different rates. So to improve this, actually, there is a lot of suggestions that the institutions have been getting is, why don't we float the exchange rate? So if we float the exchange rate, will it resolve the problem? And I can tell you, we tried this in 2012. We tried this, but still we are at the same point. But did we, do we need to consider now? And I think it's a question that I would like to float here today, that if we try to develop the money market, if we have the currency pegs floating, definitely the banks going to be happy because they will have the access to dollar funding more easily if we float it. But what will happen to the exchange rate? What will happen to the inflation? What will happen to the other macroeconomic variables? So it's a question that we need to really discuss and try to find an answer. And probably today, I would like to hear some of the, because we have the investors here, we have the banks here, so I would like to get their views on this particular. And commodity market, and this will be my last point. On the commodity market, we don't have a commodity market. Nothing, and in fact, Maldives has very few limited resources. So, but is the commodity market really needed here? But definitely, when we try to promote the Islamic financing, commodity market is actually an important, essential part of in Islamic Sharia compliant instruments. Currently, we are using one of the international commodity market, which is the Malaysian commodity market we are using to trade the Islamic Sharia compliant instruments. But I believe that we need to have, someday we have to come here. We have to start developing a commodity market along with other markets to fully mature our financial sector. So I'll just skip to the. So this actually I have just talked about. So, and I have already posed this question. So I think the important things that I would like to highlight from here is, are we ready for digitalization? Just to summarize, are we ready for digitalization? So what can we do further to increase the equity and share market? Is commodity market important, or do we have a commodity to trade in the market because we don't have the precious metals, golds, which are being traded? So is it a good idea, because I know I didn't touch the cryptocurrency part because of time, so is it a good idea to introduce cryptocurrency to Maldives? So these are because these are key elements today to move further development in the financial sector. So with this, I conclude my presentation. Thank you.
Thank you, Mr. Abdullah Hassan, for a very in-depth presentation. Now, I would like to invite Mr. Abdullah Zakaria, Director General of Capital Market Development Authority, to speak on the topic, Accelerating Capital Market Development. Please welcome Mr. Abdullah Zakaria.
Bismillahirrahmanirrahim. Assalamu alaikum and a very good morning to everybody. Mr. Ali Hashim, Governor at MMA. Mr. Mark Davis, Senior Financial Sector Specialist. Dr. Ahmad Dinaz, Chairperson of Maldives Pension Administration Office. CEOs of Capital Market Development Authority, CEO of MSC, CEO of MPO, respected participants, board members of MPO, and business community present here. I'd like to start my presentation on accelerating capital market development. Contents for today's presentation, I'll be talking about role of capital market, right? What is expected for capital markets. Then universal best practices is proposed by World Economic Forum in 2016. Current market condition, so we will talk about where we stand today. And then finally, some of the current or ongoing developments, followed by possible future developments for the market. So as we all are aware of, right, the main purpose of having a capital market parallelly run with the banking system is to ensure that funds that are saved are funneled to the investments where there is a win-win situation. Right? Those individuals, companies, and so on can funnel their money to get better returns rather than keeping it concentrated as a savings and so on. Right? So pooling domestic savings and mobilizing foreign capital for productive long-term investment is essential. Right? In other words, there has to be ways to attract foreign investors to our market. Then there's also pressure for banks with high liquidity requirement by Basel III, which means it's an opportunity for capital market really. Banks have some limitations, although it is well capitalized, as we have seen in previous presentations. Then we have challenges especially in emerging markets when it comes to financing infrastructure projects. Locally, we don't really see much done in terms of obtaining finance from the private sector, from our market. Right? So there's an opportunity for both government and private sector. And as we can see, capital markets are essential for financial resilience. Right? For instance, following global financial crisis, in new equities, markets were able to raise $511 billion, and post-COVID, $626 billion in new equities. It shows that when there is well-developed markets, then there is opportunity to direct savings towards investment, which is what we need. Right? Luckily, we survived the COVID crisis because our banking sector is very well capitalized, and it's in excess of 40%, as Governor has mentioned. And I think in Abdullah's presentation, we saw the actual percentage is even in excess of 50. But we cannot, for the longer term, just depend on only the banking sector. For directing finance savings, we need the capital market. Without that opportunity, people will try to find other opportunities and often fall into scams as well. We have those universal principles that I was talking about. Encourage greater issuer participation is one. In other words, we are looking at current regulation to enable companies to come to the capital market. Recently, we have started private market placement, which allows private companies come to the market without having to list. Right? That allows them to raise finance through debt instruments. Then second one, improve investor value proposition. Currently, our investors who has to conduct transactions will have to incur a cost of about 2%. Market needs to be developed in such a way transaction costs are well below that 2%. Right? I think 2% is quite a hefty price to pay for transactions, and it has to reduce considerably. And we need volume, right? In order to get the volume, of course, we need more floats and so on. Enhance market efficiency and transparency, so transparency through governance mechanisms, and then efficiency will come when speed comes, and of course ICT is really important for that. And then attract global interest, so we have to encourage foreign investors to come, and then if there are any impediments, which I think institutions are now looking at, will be essential. Lastly, financial literacy. A lot of times we focus on investors when it comes to financial literacy, but there's a tendency to focus on financial literacy even for issuers, because the opportunities we think we have are not known. One of the examples is, just in the past presentation, we didn't know the limit has been reduced to 10,000. Right? Walking in, I was like, 100,000 was the limit. That was the last value. So I have seen, I don't know, how many of you were aware that the limit was 10,000? Can I see hands? Right. We see about 4 or 5 out of a group of 100. So, it speaks volume. So there is need. There is really need. Okay, so current market conditions. We have 10 listed companies when we consider listed in a local sense, right? Generally, we can say 9 listed companies, because for a company to be listed, equity has to be listed. We have 1 debt offering. Our market capitalization has, moved from 543 million in 2002 to almost 31 billion in 2020. Right? So we can see some improvements, some comfort. However, when we look at Buffett Index, which is the main indicator we generally look at in terms of development of capital market, it's about 32.5% currently. Right? 5 years back, it was around 18%. Although it has improved considerably, you can see how far away we are. 134% is world average. So there is considerable room for improvement, if you like. Right? I don't want to be so negative. Okay, then market liquidity is a really big issue for our market. Right? The question is, why is the market not liquid? Right? Number one reason is, I think, unable to really do transactions at the fingertip. Right? World Fact Book, right? CIA published World Fact Book says we have twice as many SIM cards as the population, including babies, right? So in terms of mobile coverage, usage, Maldives is one of the top countries, right? So there is really room for us to tap into this, right? And as mentioned by our CEO of MPO, right, main investment avenue for pension fund has been government securities, and pension funds need diversification and also improve return so that when people retire, they will have a comfortable retirement life. Right? The latest figure in investment is about 90%. So we are looking at 90% in government securities. Then May 6, right, our local index has peaked in 2008, and I think people here are aware of what happened. Within a month, there was 50% movement. And again, this year, within a year, right, within a couple of months, we have seen from 18% to 31%, largely because we have, we have a new finance company that is doing a lot of work. Thanks, Rifat and team, right? So because of their company, we have seen a spike in transactions in the secondary market. Okay, we're looking at the graph, right? Buffett index for the past 5 years. Buffett index based on 1975 to 2020 for world average, and the red circle is where we are at the current percentage. So we can see how much we have to accelerate development of capital market and in general financial sector as a whole to create an enabling environment for business, especially for the private sector. So I hesitate to say that we are around the 1985 average level, right? But unfortunately, that is what it is. But there's some comfort when we look at the descriptive statistics of those, right? The overall average for past 5 years has been 72%, so it is still attainable for Maldives, right? As you can see, some of the numbers, the value for Algeria, for example, is very low, and there are 36 countries that have Buffett index below that of Maldives, but there are much more, almost twice, more than twice really, of countries that have Buffett index above, right? Although we are proud of the achievement, I think the development needs to be sped up so that we can actually benefit from the developments. So current developments, we have private placement through Vienna platform, and I think the details will come in presentations by MSc CEO and so on. Right? We have relaxed requirements for private placement, opportunities for both issuers and investors as a result of that. Then one of the worrying things for capital market is misalignment in terms of sectorial representation. In most successful capital markets, we have economy well represented, right? So we do not see in a true sense tourism, fisheries, as well as real estate sector represented in the market. So those companies, large companies in those industries need to consider the opportunities they have by coming to the capital market, raising finance and expanding. Then automation, I think there has been enough talk about automation, so I will leave it there. Right? We have taken initiatives to improve corporate governance. Corporate governance code was revised in 2021 after broad consultation. We started the process in 2020, and we in fact send invitations to all listed companies, market regulators, Ministry of Finance, MMA, Economic Ministry, and so on. We had individual meetings before finalizing the changes, and we have added some of the things like sustainability reporting that is going to be mandatory from 1st January 2023. We have some initiatives to increase financial literacy. One of the things is what we started in 2017, capital market review. A set of articles written in the way, right? The idea is to disseminate information to the general public as well as for those students in college, universities and financial sector as well. Initially, our articles were very generic, very simple, but then later on, we have moved towards including some articles targeted at financial sector as well. And our 7th capital market review is in the process. We have also been part of World Investor Week since its inception in 2017 and have had every October, first week of October, these activities. Some more developments. We have started in the process of completion of public disclosure platform. So this is a platform where investors can see all the information about listed companies in one place with a click of a button. Right now, that information is obtained from investor tabs in individual listed companies. So we have trainings scheduled for this Saturday regarding this particular platform for our staff initially, and then it will be rolled out hopefully in the coming year. We have made revisions to Sharia advisory regulation, relaxing the requirements, because currently we have only 2 Sharia advisors, and this could also be one of the impediments for the development of Sharia products. Our largest fund has, a Sharia portfolio, but 70% of it is in GIA, right, concentrated in one place. We have very limited Sharia compliant products. And so there's a huge opportunity for private sector as well as public sector for issuing Sharia products, at least to cater for this. Then I think over the past couple of years, we have heard about privatization, but it needs to be sped up, right? Identify which of the SOEs are viable to go to public and float in that will give opportunity for investors, right? Especially the general public as well as pension fund. Then development of local bond market for project financing is also another thing we could look into. And rating services, we had a rating agency here, an Indian company, Care Rating Services, for a number of years. Again, when you have just one product to rate, there's no business to be done. So we need some relaxation on that front as well, in order to ensure that we can carry forward the developments. I think in the panel discussions, we will see more details on some of these things, right? And this is actually the end of my presentation. Thank you, everybody.
Thank you, Mr. Abdullah, for a very informative presentation. Next, Mr. Aushan Latif, CEO of Maldives Stock Exchange, will give a presentation emphasizing on sustainable development of the capital market. Please welcome Mr. Aushan Latif.
Bismillahirrahmanirrahim. Assalamu alaikum and a very good morning to all of you. I have to say I'm quite pleased with the audience today. It actually gives a signal that we all want to develop the financial sector of the Maldives. A very special thanks to Maldives Pension Administration Office for giving me this opportunity to address such an esteemed audience. Today, I'd like to just simply share some thoughts about a sustainable approach to development of the capital market. Some of the information that I might be covering today may be overlapped by previous presenters, but I'll try to give you an entirely different perspective. Sorry, this always happens to me. So just to begin, I'd like to share a little bit of market update. So at the exchange, currently we have 9 equity listings and 8 debt listings by far. My viewpoint is a little bit different on the matter because we currently have quite a diverse representation of sectors. We have banking, telecom, insurance, tourism, not directly though, but tourism is still there, and trade and logistics. So we are yet to welcome the other industries, which includes construction, real estate, obviously a major industry in the Maldives, and health, especially after COVID, and education sectors. So as you can see, currently to date, around 2.87 billion Maldivian rupiah has been raised through the market to different listed issuers. So that's an equivalent of $186 million. And if I were to comment on the market cap, as you can see, in the early parts of this year, in January 2022, it stood at 16 billion Maldivian rupiah. And to date, when I checked it yesterday, it stood at 27, 29, around that billion Maldivian rupiah. That's a 67% increase within the year itself. So, as you know, that there have been no listings in year 2022. So this actually relates to improvement in trading activity in the secondary market. So that is something I keep repeating in all of the forums, that there is always a demand on the buy side. It's an issue from the sell side. So we all need to work a little bit harder to promote listing and floating more securities. Sorry, this keeps moving too fast or too slow. Does it go back? Okay, so volume of trades. In year 2021, the entire total figure of the volume of securities that traded hands stood at 7 million. And in year 2022 to date, this year is not even complete, it stands at 29 million Maldivian rupiah. That's an exaggerated 300% increase. So this also shows that the secondary market trading has definitely increased over the years. And also, if you look at the demat holders, which is the dematerialized security holders within the market, it stands at 42,000 plus. I understand that this is not the entire space of investors in the market, but I just wanted to give you an indicator. 42,000 is around 8% of our population. So obviously we can do a lot more to attract more investors to the market. And Infinity users, I just put that figure there as well because Infinity is an application that we launched in 2017. And the investor base is currently at 12,000 plus. That's actually a quite good achievement. So I'd like to paint a little bit picture about the history of the capital market, just for the understanding, because Mark is also here. So I'll spend a little bit of time on this slide. As you can see, in 2006, the Securities Act was enacted and 2 brokers were licensed. And in 2008, the exchange and the depository and also the governance code was established. This was supposed to move a little bit faster than I was thinking. In 2014, we started our journey of our tech journey to start, digitizing our operations. So we came up with this application called FiVote, which is an online voting system to make it easier to facilitate the AGMs of listed companies. And just for your information, in the year 2022, we had facilitated 10 events through the FiVote system. And also in 2014, we started the AWS hosting, which is moving our applications to the cloud. And we have done a very good job to date. All of our applications that's designed in-house has been moved to the cloud. And finally, in 2014, we started with international memberships. ENA and SAFE, ENA, so that we are the national numbering agency for the market. So we issue identification of security numbers, unique numbers, and also we are a member of South Asian Federation of Exchange. In 2017, we developed all of our IPO-related applications. So Infinity, which was initiated with the Ooredoo IPO in 2017, it was really accepted and adopted within the market. So this you can see from the statistics from the 2019 MIB IPO, which did quite well as an application. That was the 12,000 users I mentioned earlier. 2018 and 2019, we focused mainly on information dissemination through our applications. I'm not going to go through much detail of these. In 2021, we started an entire new application because what we have been doing by far in all of our operations is trying to provide a customer-centric form of application where people actually have a need for these services. So what we understood was the 9 listed securities on the exchange, the equity listings, all of these registers were kind of managed manually, and there was a need to actually automate and digitize these operations. Because as you all know, that registries are just like living organisms. It gets passed on, it gets traded, so there's a need for, to automate this process. So we came up with this SRMS, and today we manage 7 registries of 7 different listed companies. And 2021 also marks the admission of First National Finance Corporation as a trading member of the exchange. And I have to say that their efforts have definitely elevated the trading activities in the market. So in 2022, we revamped our entire listing rules. Do I point it there? Oh, okay. So we revamped the entire listing rules so that we bring out more clarity to our IPO processes, and also, as mentioned in other sessions as well with other presentations, we actually launched a Vienna platform in September 2022. So the idea of Vienna, it has been a work that we have been doing for 3 years now alongside CMDA. The idea is to facilitate private placements within the market, and paving way for private companies to, more issuances in the market. So the idea is to have a relaxed mechanism than the market to cater for more issuances. 2023 and beyond. So I put a little plus sign there so that, to just manage for contingencies. So we are planning to revamp the Infinity system, which I mentioned earlier. The idea is it is in progress and it is targeted to be launched in Q1 of 2023. I hope no one quotes me in another forum regarding what I say here. 2023, the Infinity revamp is mostly about improving the information environment for all of our investors. And also, some complaint and concern we hear every day is like, hey, did our dividend get deposited or not? So this will eliminate all of those, and then for investors, they can access whether the dividends are paid, the dividends are due or not. And also, in 2023, this also is underway, so we've been working on this for quite some time now. So it is a trading interface where what we are trying to do is, when orders are placed, it can be placed online, and it lands directly to brokers. Finally, the much-awaited ATS and CST system. So what ATS is a matching engine, and CST is a central securities depository. And there have been a lot of dialogue on how we achieve this, how do we digitize this, and then as I have quoted in the Capital Market Forum, that's what Zakaria was saying, we have committed to deliver this in 2023, but then I take it, I'm adding a plus sign right there, so that to enable for a bit of contingencies, because technology obviously is not so straightforward. We need to test it, we need to, vet it by the regulators, so obviously I'm buying a little bit more time with the plus sign. So, just to wrap up on this slide, overall, what I feel is that we have come quite far in digitizing our operations, and the pace is quite good. we all might not agree with me, but the pace is actually quite good. It has only been 14 years, and leading up to an ATS system, what we have been doing so far is that we've been developing different components which actually communicate with each other. It's my BT, or technology team tells me that it's called Agile Framework of Development. So we are on this, and just to put a quote out there, I want to quote the Gates Law. You must have heard of it. Most people overestimate what they can achieve in a year and underestimate what they can achieve in 10 years. So obviously, if you look at the timeline, considering our development, I think we all can relate to this. By the time this loads, I can have a drink, yeah? So I also thought that I would share with you a little bit about other markets. So I have taken the example of the Sri Lankan market, which is a close neighboring country. It's a relatively comparable market with the Maldivian market. And so as you can see, in 1986, the Colombo Stock Exchange was licensed. And they followed by a couple of investments in technology through national level. And then it took 11 years for them to establish an ATS system. 11 years. And then it took 35 years for them since inception to completely digitize their operations. Since I came just now recently from Iran, I thought I'll put this out there. This is a more developed market. They have 80 million people in population, and 50% of that population, 40 million are registered investors in the market. So I just took this example here just to highlight a few things. I'd like to bring your attention to 2005, which is the Securities Market Act, and the SEO is their regulator, Securities Exchange Organization. The funny, a little bit a different thing here is that it took 38 years for them to establish an act and also the regulator after the first licensing of their exchange. So what I'd like to share with you with these slides is to say that we all have a very different, unique journey when it comes to development of the market. Also, in 1994, if you can look at it, the TSET MC, that is the Technology Management Corporation, which provides all the technology solutions for the Iranian capital market. And guess what? It's owned by the regulator. So this actually shows a national level interest in digitizing the efforts of the capital market elsewhere. And so, like I said, I just wanted to share this slide to say, to showcase the pace of their development against ours. And I do understand that this is definitely the digital era. Like Zakaria has said, we can accelerate the development of the Maldivian capital market, but I'd like to just factor in that we have to look at it in a more sustainable manner. I'd like to have a few words on technology as well. We do understand that we are a geographically dispersed island nation, right? And there is a need to leverage technology. And during the COVID time, the pandemic, the Fahivote app, the first application that we have ever delivered, it actually gave us a very unique line of sight because we actually understood from the data that the market is actually ready for adoption of technology. So since this is close to lunch, I'm not going to drag this anymore, but I just want to give you a topic for conversion to converse upon during lunchtime, which is how do we approach technology? Like if we were to buy technology offshore, or if we were to develop it in-house, how do we actually really go about it? So I've identified just 4 kind of pillars that we can discuss upon during lunch, obviously. Need. So during the entire journey of tech development, what we understood is that firstly, we have to identify that there is actually a need for development to operate our processes, yeah? So we always have been designing to cater for a need. We are designing for a reason. It is actually called a customer-centric form of development, and I think that is the only way that we can increase the usability of our services. When we talk about simplicity, is it too much tech versus primitive tech or no tech at all? do we actually need a system that is at par with the rest of the world? Are we looking at blockchain? Are we ready for blockchain? Blockchain actually eliminates a lot of, and it actually increases a lot of efficiency for processes. But for that to be in place, the country, even the country's laws, has to be at par with those. So I obviously think that we could actually think on everything in a different perspective. What we actually require is not a complex infrastructure, but what we require is a more simpler solution that actually matches our market. So what is it important and what is that we are seeking to achieve? That's the question I'd like to ask all of you. And in terms of reliability, yes, this is really important. As the users of our technology increases, obviously it is prone to cyber attacks. And then we obviously have to be mindful of it. When we develop our technology, we always do third-party testings. I mean, it's not 100% bulletproof, no, it will never be, but we do take those initiatives and it is also vetted by the regulator. Sorry. The last slide I almost slipped. Sustainability. Does immediate actions mean a sustainable solution? That is a question that I'd like to pose at all of you. So during this whole ATS and CST system purchase, all these dialogues we had a couple of years, even before me, the former CEO, he also ventured into a whole different study, research on how do we bring all this technology back home. So one thing is, an immediate action would be to purchase an off-the-shelf system. But the question is, at what cost? Right? So the acquisition involves a huge cost. The annual maintenance of it requires a huge cost. Can the market sustain it? We were now even talking earlier in these sessions that 2% commission for secondary market trading broker commissions is too much. So how do we sustain an ATS and a CST system with just commissions, with such less floated securities? And also, I'd just like to acknowledge here that there is the largest pool of talent with us. We actually have it all. You know, we are actually exporting some of our tech talent to neighboring countries. We all know about it. So why don't we leverage on it? And perhaps it could be a much wiser option to develop these in-house, matching our need, a simplified, reliable, and a sustainable solution. Let's look at the outlook. Here, I'd like to just say a few words about what is desired by the exchange, by the market, and how we could achieve them. So the greater than sign actually is left there on purpose. It means we want to be more than a market for the country. So first and foremost, in my opinion, there needs to be a blueprint, a national level action plan. This idea has been pushed forward so many times. The action plan will actually give us an idea on how the development of the market actually takes place and which institutions will lead this venture. And one other thing I've put down there is communication. What I've seen so far is that the dialogue between the Ministry of Finance and the CMDA needs to be a little more solid than what it is current now. And then if I were to reflect back on the Iranian capital market, they actually had a higher council right above the regulator. So this council actually gives direction to the market at a policy level. I'm not particularly saying that we need more layers and more bureaucracy for our market. It's a very small market. But what I actually feel is that we need to vest with more powers for CMDA to deliver on this biggest role that they've been assigned. Policy drive. I mean, there's repetitions on these policy drives. We all know about it. We need more market participants, rating agencies, investment banks. We need to improve financial literacy. Somehow, targeted financial literacy may do much well for us. For instance, media training is something that we can look into. We obviously have to bring in more foreign investors because the savings within the country is obviously not enough to meet the investment needs of the nation. So there have been a couple of movements from CMDA, I believe, to place regulations that could facilitate these. And also reg technology. This is a buzzword, this is a very popular concept elsewhere. So I think that as regulators, you could also do a little bit more on embracing new technology. In terms of listings, we actually need to grow the landscape of listings, attract listings from different sectors. It could be done through an incentivized model or a policy-led model. And to attract more investors to the market, obviously this is a problem or a concern that we have faced multiple times, which is the entire KYC process. As mentioned by the governor in his statement, we are looking forward for more of a consolidated or a central KYC system that can actually share data with the rest of the financial institutions. I put down income tax here as well because I feel like there could be more leniency, especially when the capital market is still at an early stage, so that it could be more of an encouraging tax regime for more participation in the market. So this slide and the next few slides are just going to be my last, just letting you know. I wanted to focus briefly on how the capital market of Maldives is supporting the growth of the pension fund. So I just want to present these data in a little different manner. So if you were to look at the 2021 figures, 46 million rupiah came through dividends from listed equity. 8 million from bonds, 16 million from sukuk. So all in all, around 70 million rupiah has come through listed securities to the pension fund only in 2021. And if you look at the shuffle, sorry, this is what happens. Can you see the numbers there? No, not really. Okay, I'll just, it's not much. I can just brief it to you. So if you look at the portfolio composition or the investment composition, the listed securities, equity, bond, and sukuk makes up to 6% of the portfolio of investments of the pension fund. 94% is invested elsewhere. Whilst what we can see is the listed securities are definitely giving much, much higher returns. So there is a need for us to shuffle this for the benefit of all. So I keep repeating the fact that the overall financial literacy of the market is a little poor, and we could obviously do a little bit more. But what we also need to understand is that, in principle, the pension fund is actually investing for all of us. Yeah? So with or without financial background. So I guess that it is a shared interest for all of us in this room to develop the market. So that comes to the end of my brief presentation. So I'd like to ensure and commit to you that we will continue to invest in the capital market, and we do have the technical know-how and experience through our foreign and cross-border collaborations. And good news is that there are a couple of potential listings coming to the market, so keep an eye out for them. All in all, it's a matter of consistency versus intensity. So I would encourage all of you to be patient and constant and keep our duty to Allah so that we may succeed. Thank you. Wassalamu alaikum.
Thank you, Mr. Aushan for bringing in a very valuable perspective on the topic. As the last event for the morning session, I would like to invite Senior Financial Sector Specialist from World Bank, Mr. Richard Mark Davis, to share his expertise on the role of financial infrastructure for capital market development. Please welcome Mr. Richard Mark Davis.
So, good morning. Governor, good morning. All other attendees, I want to express my appreciation for being a part of this event. This is exciting, and I appreciate the chance to, again, contribute. I do realize, and I'm very conscious that I stand between you and lunch, so I'll be crisp and efficient, hopefully, with how I present. But I did want to make sure to thank the pension office who's made the arrangements for me to be able to be a part of this. And I very much appreciate that and have again, enjoyed a few days here already and am enjoying today quite a bit. But my focus will be on the role of financial infrastructure in capital market development. What I'm going to try and do is bring it to life a little bit, this idea of financial infrastructure. I'll present it in a couple different ways, and hopefully through that means we'll, again, make it come to life more than perhaps what it might otherwise do. So this is the agenda that I'll follow. We'll walk through an important first piece, which is, well, why do we want to do this? What is the rationale for local capital market development? I'll talk about financial infrastructure. I'll talk about it from a couple different ways. There's a couple lists, but I think what you're going to find is there's commonalities among those lists. So again, by presenting it in a couple different ways, my hope is that you will, again, it'll sink in a little more deeply. I want to present a picture of a capital markets ecosystem as an idealized objective, let's say, of where we could be going. I want to talk about capital market sequencing, the role of government, empirical evidence, and finally I'll conclude. So just to kind of ground us in the global environment, I was a little surprised by these numbers when I was putting together the presentation. But if you look at what is out there in terms of equity and bond issuance globally, as of the end of 2021, we're over 250 trillion globally. So it's massive as far as what the global capital markets represent. You can see geographically for both equity and bonds, which geographies make that up. And it's a combination of the US, China, and Europe that make up the big three, and then all sorts of other components that make up the remainder of both the equity issuance and the bond market issuance. So these are significant, massive players on the global kind of scale. And so this is the framework from which we can say some things about capital markets and what they're capable of doing, and hopefully, again, provide an objective going forward. So why capital markets? Why local capital markets? Well, one view that I'm going to present here, and I won't go through the whole list, but basically and let me step back for a second. You'll see on the slide, I say see reference 5. The very last slide in the deck, I'm going to present 7 papers that I found particularly helpful. Basically, 4 of them are from the World Bank, 3 are from the IMF. I think the technical team was using 2 of the IMF papers already in some of their work preceding the forum to put together the background for it. So those will be familiar. But the 4 World Bank papers are actually put together by the actual team that I work on at the World Bank. A number of my colleagues focus on capital markets, and they've got some good material I want to put in front of you and make sure you're aware of. But in any case, this is from an IMF source, and you can see the reasons that they give as the rationale for local capital markets development. There's all sorts of things that it effectively allows. It supports the conduct of monetary policy. It improves access to both local currency financing, or let's say long-term financing and specifically local currency financing. It allows and enables deepening, and it can improve financial integration. So there's a lot of reasons to believe in terms of why local capital markets can be very helpful. Here's another way to look at this. And again, this is from one of the resources from my team at the World Bank. I think if I could recommend 2 of the resources, this would be one of them. I'll mention the other one in a little bit. But this is a primer for policymakers focused on capital markets development. I think this just came out in 2019 or 2020, so I think you'd find it particularly helpful. And it's not super lengthy either. It's relatively crisp. But their reasons for why capital markets, well, they're going to drive economic growth. They're an important source of financing for companies, and I'll come back to that theme a couple times here. They offer investment opportunities and risk management to investors, so they broaden the playing field. They enhance financial stability. That's the exact same thing at the end of the IMF list in the previous slide. And then they may help in attainment of the Sustainable Development Goals. So there's a number of things that capital markets can help the economy achieve. So what has COVID done? I think most of us probably realize this, but the challenge has just become a little tougher. We've seen a deterioration in the global macroeconomic environment, economic contraction in some countries. I think news just came out about Japan seeing a decrease in the latest quarter. And we see much larger fiscal deficits. And I think this means a lot of countries have systems that are much more brittle than what they were before, with these much larger deficits. And then we see the investor appetites around the world decreasing. So they're not as eager to just buy whatever the latest tech stock might be out there. They're actually being a lot more careful, which is a good thing, but it's happening in mass, and so that makes it more challenging from a global standpoint. And then the governmental interventions that were done during the pandemic, we don't really know entirely all the outgrowth of what those will do. We think probably the inflation that we're seeing globally is one of those outgrowths, but there's a lot that we don't know about what was done because it was so large. So that just makes the challenge a little bit more daunting. So what is this topic of financial infrastructure? I would suggest, and this is referring to one of the IMF papers, and this is the same definition that the technical team was using. This is I would call it a relatively broad definition, but it's a good one. But I'm going to, again, show you some other sides of it so that it perhaps comes to life as we go forward. But you can see the list here, and a lot of these are going to make much sense. Legal and regulatory framework, the supervision, accounting, and auditing environment, and this includes not only the rules and systems, but also the professions. So the profession of accounting and how strong it is, and things of that nature. Corporate governance, we've heard that mentioned a couple times. And then this topic of information infrastructure. This is far-reaching. The idea of credit bureaus and registries and rating agencies. I mean, if you think about it, this really is a very large topic and an important one. The clearing, settlement, and exchange systems, and finally, liquidity and safety net facilities. So financial infrastructure is far-reaching, it's broad, and I think this is a good definition, but what I'm going to do here is present a couple other views of it. And the papers largely that I'm referring you to at the end are all focused on capital market development. And in every single one of them, they have some version of financial infrastructure. They may call it enabling conditions. They may call it preconditions. They may call it building blocks. All sorts of language is used, but it's basically all leading to some of the same conclusions. So in this 2014 IMF paper, which is focused on building local capital markets, they come up with what they call preconditions. So they see it as threefold: sound macroeconomic policy, strong institutional and legal setting, and then a well-functioning what they call financial infrastructure, but I think this is a little more narrow. This is more of financial infrastructure as the mechanical undergirding that makes things happen, clearing and settlement and all sorts of things that fall into that kind of bailiwick. But the overall concept is basically the same. Okay, so two more ways, and this comes from, on the left-hand side, the primer that I showed you the picture of a second ago. And then on the right-hand side, my group also put out a paper about local currency bond markets and how to effectively build them. And they have probably the fanciest depiction, which makes it helpful. But on the left-hand side, again, threefold preconditions in this case. They focus on the macro, similar to the previous one. They focus on a solid legal and institutional environment, and then finally on market potential in this case. Now on the right-hand side, they kind of split it up into two things. They call it enabling conditions, and then they focus on what they call building blocks. So in the case of enabling conditions, remember this pertains to building local currency bond markets more specifically, a little more narrow than just capital markets overall. But you can see some of the factors here. Again, general macro, that's pretty consistent. The financing needs of the government, that's going to be important. Structure of the economy, debt management capacity and operating procedures toward the end. So some key enabling conditions are going to kind of come into play. But then I think what is interesting is this idea of building blocks and the investor at the middle, but the legal and regulatory framework at top, the financial market infrastructure at the bottom, again, a little more narrow, the mechanics of how things work, how things clear, that kind of thing. And then the primary market supplemented by the secondary market and the money market on the right-hand side. So, and they show all the interactions and the flows. But again, conceptually, it's saying somewhat the same thing, but what needs to be true in the case of building effective local capital markets are a number of factors that we're going to want to make sure are cultivated. So where are we going? I wanted to just present this picture. This is from that primer that I showed you the picture of a few minutes ago. So what you want is, the objective should be, is to build a healthy version of this capital markets ecosystem. So like many things of this nature, it's a circle. You have the investors on the left side and you have the issuers on the right side. So you have folks who want to put their money in a place where it's going to earn a decent return, and then you've got the issuers who need, they need to borrow. You've got the instruments themselves on the bottom, and then you've got this idea of information flow, and that's more of a two-way. You've got the infrastructure sitting inside of that circle. You've got intermediaries doing some work inside of that circle, and then sitting over top, you've got regulators, regulations, and all that goes along with that. So I think this is a nice way to think about where are we going, what do we want to build, what's the objective. The second paper I wanted to really draw your attention to is, again, one from the team I work with, and this one focuses on this idea of capital market sequencing. So how do you, what's the order of events? What happens first? What happens next? And in their view, this all kind of centers around an idea they call the asymmetric information framework. So this is the concept that inevitably borrowers have more information than potential lenders. So unfortunately, what that means is the potential lenders are going to underprice the really good propositions, and they're going to overprice perhaps the bad propositions. And people know that, and so they pull back. And that's why we struggle in many cases to build what we want to build in terms of capital markets. One of the early IMF papers also had that same concept, and I think that was one of the concepts the technical team used, which talked about how early days the banks are going to do pretty much most all of the financing. And in fact, the banks may compose the financial infrastructure entirely, whereas as things progress, then you do get institutional investors who are able to finance more information-heavy type of investments. This is a bit of the same idea in this capital market sequencing paper, is how do you get past this asymmetric information framework? I wanted to just draw out some of their key points. One of their key points, which I think is good for us to remember, is there are no right and exact ways. There's no one right way to do this, which I think would make sense. Each country, each situation is going to have its own history, its own progress to date. And so in many cases, what we see is quite a bit of variability between corporate equity versus corporate bonds. In some countries, the corporate bond market has come first. In other countries, corporate equity market has come first. But derivatives pretty much, in most cases, come toward the end of the sequencing. So there are some constants. We do see, as we study the data, a lot of benefit from early development of domestic institutional investors. So that's a good thing. And then finally, foreign investors. On balance, they bring substantial benefits, but they also amplify risk and volatility in some ways. So they need to be monitored, and they need to have some safeguards in place to kind of deal with that reality. So this, from that paper, again, the capital market sequencing paper, this is helpful, I think, because it shows this idea of trust, moving from very little trust toward a lot more trust. And then it shows what can be true then with the intermediaries, what can be true with savings instruments, and what can be true with financing sources. In many cases, companies, especially small companies, wherever they can, they're going to use internally generated funds. So the famous pecking order theory. But as they develop and grow and hopefully look for opportunities for growth, they'll go to secured debt. Maybe they'll have the opportunity to go to unsecured debt and ultimately the equity markets if everything works out. So in each case, whether it's those financing sources, whether it's the savings instruments or the intermediaries, this just kind of shows the continuum of how things progress as trust increases in the system. So what is the role of government? Well, the first responsibility is going to be to make sure that these, call it what you will, the preconditions, the enabling conditions, the financial infrastructure is in place. And make sure especially that includes good regulation. The third responsibility is going to be an ongoing one, monitoring risk and making sure that financial stability is safeguarded. And then finally, proactive enforcement. This won't be readable for you, but I want to make sure you're aware of it. This comes, again, from that capital market sequencing, the second paper. And basically what it is the empirical research that backs up the idea that each of these components of financial infrastructure are important. Again, this is a threefold breakdown of what needs to be true. And then underneath each of the three categories, there's an underlying element. So as an example, under institutional preconditions, they talk about it in terms of preconditions. One of the institutional preconditions is the quality of securities regulation. So then it gives all the papers that support that as a key point of evidence for enabling capital markets to thrive. The paper, if you're able to get your hands on that, and these are all publicly available, once you have the link, it has the detailed bibliography. So if you're particularly interested in that, quality of securities laws, you can go to that paper, find the bibliography, and you'll see what paper they're making reference to. So I thought this was helpful as far as, if we need empirical evidence, here's the data that backs it up. So in conclusion, we know that there's a significant size of prize from growing capital markets. It's going to be substantial. It's going to lead to economic growth, stability, hopefully will lead to further job growth, and then attainment of the Sustainable Development Goals. Developing financial infrastructure, I hope I've made the case for almost every time that people talk about developing local capital markets, they talk first about what needs to be true. So I would argue that developing financial infrastructure will enable that local capital market growth. And then there's no single right path. It will be country specific. Sequencing may work in one case differently from somewhere else. There's many paths forward. But the last point here is institutional investors will likely have a key role to play. And one interesting data point from that sequencing paper is, if you go all the way back to 1970 and you look at the G7 countries and the ratio of wealth allocation among currency and bank deposits, bonds and equity, and then institutional investors, you see that in the case of 1970, institutional investors only were 16%, but by 2016, they had tripled their share of the wealth allocation to 48%, almost half. So we can see that in the developed economies, the institutional investors clearly are playing a growing and more significant role and have been very helpful in that development and that economic growth that's been experienced. Here's that list of references, and hopefully we can make these available electronically so that you have an easy way to access these different papers and these different sources of additional information. So thank you.
Mark Davis.
This concludes the morning session of the Maldives Finance Forum 2022. We will now break for lunch. Lunch is served at Vihamana restaurant. We'll see you back here at 1:25. Enjoy the lunch. Thank you.
Assalamu alaikum and welcome back. As you all may know, we have a panel discussion coming up this afternoon. The topic of discussion as well as the information on panelists are all available on our mobile app and the Finance Forum website. You can direct any questions you may have to the panelists via live chat through our mobile app or website. Also, please note that tea and coffee will be made available throughout the rest of the event right outside this hall.
Next, we have a presentation by Maldives Monetary Authority on the topic Access to Finance. The presentation will be delivered by Mr. Ibrahim Shaugi and Mr. Ahmad Nazih Mohammed. I would like to invite the team from MMA to present this item.
Good afternoon, everyone. I hope everyone had a good lunch, and I know everybody is going to be a bit sleepy after that lunch, so we'll try to keep our presentation as short as possible. To begin with, it is my honor to attend this gathering and to address the leaders of the Maldivian financial sector. In the morning session, we have already heard from multiple presenters on financial infrastructure for capital market development. So in our presentation, we'll look at the other side of the coin. My colleague Nazi and I are going to be sharing with you the initiatives MMA has undertaken to improve access to finance and financial inclusion in the Maldivian economy. We'll be looking at the specific initiatives undertaken by the MMA, as well as a brief introduction into access to finance and financial inclusion. Access to finance is the availability and affordability of financial services for individuals and firms. The topic of access to finance and financial inclusion has been of growing interest throughout the world, particularly in emerging and developing economies. Policymakers are increasingly concerned that the benefits produced by financial intermediation and markets are not being spread widely enough throughout the population and across economic sectors, with potential negative impacts on growth, income distribution, and poverty levels. Furthermore, they are also beginning to be concerned with the potential negative consequences for macro stability when financial system assets are concentrated in relatively few individuals, firms, or sectors. The initiatives and policies designed and undertaken by MMA are designed to address the barriers to access arising from the overall institutional environment within the country. At the same time, they are also designed to provide the necessary tools to the institutions to address their specific constraints. The policies and initiatives undertaken by MMA can be broadly categorized into three categories. Number one, they are policy-related activities and initiatives. Second, we have demand-side initiatives to address demand-side issues, and supply-side initiatives to address supply-side issues. The governor in his keynote has already highlighted some of these initiatives, and in our presentation we'll go into the detail of these specific initiatives. For the policy-related initiatives, our main initiative has been a development of a financial inclusion strategy for the nation. On the demand side, we'll be focusing mainly on financial literacy and financial education, as well as consumer protection, and the payment system will also address some of the demand side issues, specifically with quality of access and efficiency issues. For supply side information, our main initiative has been the establishment of a credit information system, as well as the establishment of the payment system, which will address supply side issues as well. And also we have recently taken an initiative to address certain supply side issues in relation to Islamic finance. The major initiative in relation to policy is going to be the development of a national financial inclusion strategy. I will not go into the details of why financial inclusion is important, as I have already highlighted the relationship between access to finance and financial inclusion to economic growth. The governor has also highlighted that a strong and sustainable financial sector is a building block of a strong economy. At present, there is no formal unified plan or strategy to address financial inclusion in the Maldives. There have been various fragmented initiatives undertaken by various stakeholders. Some of these initiatives are various financing facilities offered by various ministries directed at various sectors of the economy. MMA has also undertaken a credit guarantee scheme where 90% of the eligible financing provided by financial institutions under the scheme were guaranteed by the MMA. However, this scheme was discontinued with the establishment of a specialized SME financing institution. There have been others as well, specifically related to financial literacy and awareness as well. However, these were fragmented and without any national direction or measurable targets. Therefore, to sustainably achieve financial inclusion objectives with measurable national targets, MMA in collaboration and consultation with public and private sector stakeholders is going to develop a national financial inclusion strategy. I'll take a brief look at the financial sector of the Maldives. At the moment, we have 8 banks, 5 insurance companies, and 3 other financial institutions. Our data is a bit outdated, which is one issue which we hope to address through the financial inclusion strategy, collection of updated, up-to-date statistics and information as well. In this slide, I would like to highlight the penetration of the formal banking sector. We have about 509,000 bank accounts in the country. If you look at percentages, nearly 85 to 90% of the Maldivians have a bank account. So in a way, we could say that access to financial services, specifically banking services, has reasonably been achieved. However, when we look at the broader financial inclusion perspective, financial inclusion goes beyond access to finance. We have to look at usage, we have to look at efficiency, and we have to look at costs as well. So, although nearly 85% of the population have bank accounts, the usage is not up to that standard. So the financial inclusion strategy, together with our partners, will address these issues as well. The challenges facing the Maldivian financial sector has been highlighted in various forums over the years. The main challenge that's always highlighted is the geographical dispersion. We have recently conducted a demand-side survey in preparation for the financial inclusion strategy. And the demand-side survey results show that although the islands are geographically dispersed, financial services, specifically banking services, are available all over the country. Everybody has access to banks. So maybe the geographical dispersion is not as big of a challenge as that we have always been assuming. At the same time, the introduction of digital financial services should bridge this challenge. Another challenge facing the industry is the high cost of finance. It is something which everybody has experience of, and hopefully will be able to address this issue through the policies as well. There have been highlighted that there's limited access to financial services. As I just mentioned, the survey shows that all over the country, people have access to banking services. However, there are other financial services which may be lacking in various areas of the country, specifically insurance services and maybe capital market services as well. Lack of infrastructure and human resource has also been identified as a challenge. Financial inclusion is a complex, multidimensional issue that requires collaboration between multiple stakeholders. With regard to the National Financial Inclusion Strategy, our initial task was to form a national steering committee, made up of all the key public and private sector stakeholders. The main task, the initial task of this National Financial Inclusion Steering Committee has been to formulate a definition of financial inclusion in the Maldivian context. So the definition that we are going to be using in the Maldivian context is that financial inclusion means to provide convenient access and effective use of quality, affordable and sustainable financial products and services in an equitable manner, delivered through formal channels, complemented by robust consumer protection policies, financial education and literacy to all. So as you can see from the definition, financial inclusion goes beyond access. There are other dimensions of financial inclusion that we need to take into account. The financial inclusion strategy contains these focus areas. One focus area is going to be on regulation, specifically dealing with financial consumer protection. Consumer rights are going to be covered through this regulation. The other focus area is going to be digital finance. National Payments Project is going to be one of the focus areas under this theme, and other digital financial initiatives would also come under this theme. Financial literacy and financial education is also going to be a focus area. One idea that we have been floating among ourselves with regard to financial literacy is inclusion of financial education and financial literacy within the national education curriculum. The next focus area is going to be access to finance. Under access to finance, we'll be focusing on gender-focused financing. At the moment, Maldives does not have any policy or any regulatory hindrances towards gender financing, gender-focused financing. However, Our surveys and our data shows that there's an imbalance between account ownership as well as access to financial services when data are disaggregated. Sex disaggregated data shows that there's a gap between males and females. So we'll develop policies and initiatives to address this issue as well. Another key area is going to be inclusive green finance. Governor in his key note also highlighted the importance of green financing for development. Another focus area is going to be micro, small and medium enterprises financing initiatives as well as Islamic finance related initiatives. The next initiative that MMA has undertaken with regard to development of the financial sector has been the establishment of the Credit Information System, Maldives Credit Information Bureau. The Credit Information System was launched in 2011 with the Credit Information Bureau regulation, which was issued under the Banking Act. It compiles the public record data, statutory information, identity information, credit transactions, and payment histories of individual consumers and commercial entities. The Bureau provides credit information reports to its member institutions and self-inquiry reports to individuals and corporates. So anybody can get their credit information, their self-inquiry report to the Maldives Credit Information Bureau. And we encourage everybody to at least check their credit history once a year. We do provide one annual report free of charge, and any additional reports will come with a small fee. As of now, there are 8 banks participating in the Credit Information Bureau, as well as 3 other financial institutions. The governor in his keynote highlighted that additional data providers will also be joining the Credit Information Bureau. So utilities will come in, telecoms will come in, and other non-financial institutions will also come in and provide their data as well. So the joining or the participation of alternate credit providers in this system is going to be a significant change to the system. The recent legislative revision allowing utilities to be registered in the name of tenants is going to be a significant change in this field, especially for micro and small enterprises. Our banking system is a highly collateral-based system, and these enterprises do not have any collateral and are thus excluded from the financial system. With the inclusion of alternate data, such as utilities data, within the credit information system, these enterprises will be able to build a credit history which they could use to secure financing. Another component of this infrastructure is going to be the secure transactions registry. This registry will also enable access to people and enterprises without hard collateral, as it would allow the use of movable assets such as inventory as a collateral. I will skip some of these slides in the interest of time. The third area that I'm going to be looking at is Islamic finance related initiatives that MMA has recently undertaken. In relation to Islamic finance, NFI, a key focus area of the NFI strategy is going to be Islamic finance. Our strategic plan also contains Islamic finance-related initiatives as a key focus of the development initiatives of the MMA. So, our focus at the MMA has always been to establish an enabling environment for Islamic financial institutions. This would allow all Islamic financial institutions to operate or play at a level playing field with their conventional counterparts. In this regard, I want to highlight the MMA Commodity Murabha facility, which we have recently developed, and this is going to be a significant step towards the achievement of our objective to level the playing field. Under the MMA CMF facility, this will finally allow us to offer stand-in facilities, including overnight deposits and overnight financing, as well as remunerate the minimum reserve requirement of Islamic banks, security deposits of Takaful institutions. At the same time, we can use this structure to incorporate Islamic banks within the monetary operations of the MMA through open market operations. Future developments of this structure could include additional liquidity management instruments such as central bank securities. We envision the CMF as the foundation of a Sharia-compliant money market. With that, I will hand over the presentation to my colleague Nazir, who is going to be elaborating further on the Maldives payment system project and to conclude our presentation. Nazir?
Thank you, Shaugi. And as my colleague Shaugi just highlighted, the Maldives Payment System Development Project has been and is one of the most important initiatives currently being undertaken by the MMA. And as the system is going to be a systemically important financial market infrastructure, the system will help increase access to finance as well as contribute towards financial inclusion. And I will try to give you an overview of what the system is, give you an overview of the objectives of the project, as well as the advantages from the perspective of the merchants, customers, as well as the banks and the government. So, from the day one of the project, our promise has been that all Maldivians, including the unbanked, will be able to send and receive money instantly regardless of the island they live or the payment solution they use. So in other words, we will have the system designed the system is being designed in such a way that it is irrelevant what the island you are, and you can easily be onboarded to a wallet or an account so that you may proceed with the payments. And I hope the upcoming slides will help you understand why we are saying so. Now, to quickly go through the primary objectives of this system, the provision of the payment services has been and are typically central to the banks and fixated on the legacy systems. And with the need for services to evolve with the technological development, we believe this system will help transform the payment landscape of the Maldives. And also to establish open, fast, modular, and secure infrastructure, open for all types of players, including the banks and the payment service providers. And the system design is modular, enabling any plugins of any new developments as and when they develop. And then establishing a level playing field for existing and potential market players. Then, increasing innovation and competition in the payments industry. I believe this is one of the most important objective of this project, to cater and to allow the new startups and payment service providers to come and provide innovative, modern solutions to payment to the customers, and ultimately enhancing the financial inclusion through the provision of digital financial services. Now, there are two main components of the Maldives Payment System Development Project, that is the development of the regulatory framework and the development of infrastructure. And if you look at the development of the regulatory framework, we have published the National Payment System Act in 2021. And under the Act, we have already published the Payment Services Regulation, replacing the existing regulations which were there for remittance and mobile payment services, to streamline the licensing and oversight of payment services. This way to improve the oversight of the payment services from a consumer protection perspective as well. And also, payment system regulation and open banking regulation is currently under development. And eKYC regulation, as was highlighted in the governor's speech, is currently in its finalization stage. And with the publication of this regulation, we hope that onboarding customers, new customers, to the payment solutions, as well as to opening their accounts, it will be easier for them. Now, if you look at the instant payment infrastructure, the instant payment, the core component of the solution, will allow person-to-person transfers or person-to-government, or the transfers to be done instantly, anytime, anywhere, and clearing and settlement as well. Then we have, this includes bulk payments, as well as request to pay and services as such, which will facilitate account-based domestic retail payments. Then we have smart addressing component, which will allow you to initiate payments using aliases without having to remember your account number or without having to remember your wallet ID. Instead, you can use easy to remember aliases such as your mobile number or your email address, or maybe you can even use your ID card number. So these aliases can be used to initiate payments. Then we have open banking component of the solution, which allows you to view all your accounts in one interface, and you can use this interface to initiate payments using any of your accounts, be it at any bank or any payment service provider. Then we have payment platform, which is an open multi-tenant solution which can be customized to your the payment service provider or a bank who wishes to provide instant payment services can opt to go for this service as well. You can customize it to your branding, and the basic instant payment services can be provided using this platform. But this is part of the phase 2 of the project. And then I'll quickly look at the benefits this system will have for the consumers, for the businesses, for the banks or PSPs, and as well as the government. If you look at the benefits for the consumers, they will have access to their funds 24/7, 365 days, even if they have their bank accounts in another bank or another payment service provider. And then they can use convenient services such as smart addressing service or the digital solutions that comes with this, and reduce dependency on cash and checks, access to low-cost digital financial services, and increase efficiency in making and receiving payments. And as Shauki just mentioned, with alternative data service providers, for example, if your credit history is being recorded properly, Even non-collateral credit facilities can be provided by these PSPs to the customers at a lower cost and with convenience. Then if you look at the benefits to the businesses, they can also have access to their funds in real time, and as the payments can take place in real time more predictably for inflows and outflows of funds, that can improve the cash flow management of the businesses. Also, they can have alternatives for cash or checks. Several challenges and risks associated with the dependency on cash and checks can be addressed and mitigated with this. And also, the services are no longer restricted to banking hours. At present, that is a huge challenge for some of the businesses. And innovative and low-cost solutions can be brought in and provided, customized for the payment service providers. With the new innovations and modern solutions that are provided by the payment service providers. Then increase in efficiency in making and receiving payments, and even for businesses, they can go for non-collateral credit facilities when these facilities are developed and offered. And for the banks or the payment service providers, the main advantages for them will be the enhanced interoperability, and the level playing field for competition. And also, they can explore new opportunities to introduce innovative services at a lower cost. And they can with the enhanced regulatory framework, they can even conveniently opt to provide more services and increase their product portfolio. Then increase efficiency in making and receiving payments. And as for the government or any other institutions which are related, easier and efficient modes of receiving and disseminating payments can be opted for, and minimizing the dependency on cash and checks to make and receive payments. And before I end my presentation, the developments that were mentioned by Shauki and with the implementation of Maldives Payment System Development Project, we hope the access to finance will increase, and ultimately it will contribute to the economic growth of the country. Thank you very much, and I hope these will help in the discussion that is taking place today, and hope you have an idea of the payment system project. Thank you.
Thank you, Mr. Shauki and Mr. Nazi. We've seen a number of very informative presentations throughout this event. If you would like to refer back to them at a later date, it should all be available through our mobile app and the Finance Forum website. Next on the agenda is the pension office segment of this forum. We will now give the floor to Director of Stakeholder Relations, Aishat Fazna.
Assalamu alaikum and a very good afternoon to you all. We'll try to use the pension office segment of this forum to create something more visible based on the discussions we've had plus the knowledge that you have. We call it the notes boards because we'll be using these notes boards to create some notes for your future references as well as for reflection. For the notes boards, we will need The notes boards will look something like this. We will have two different boards, one for the current or the existing situation, and the other one is for the future, the things that we want to see in the future. For the current board, we'll be using the blue papers. For each table, now you'll find papers like this, something like this, a blue-colored paper and an orange one. For the blue-colored paper, we'll be using to write down the positive things that we have in our financial sector, the things that we know, or from our experiences, the positive things that we have. And the orange ones, it's for the things that we want to improve. And also, we'll provide you markers or pens to write. And then we have placed two tables near the entrance, hall entrance. So to write, each table is a separate group, and you will discuss within the group and try to write as many good things in the blue papers. Please remember the blue papers for the good things and the orange papers for the things that you want to improve. And we'll give you 10 minutes to write down the points and try to make it as simple, small phrases or one or two words, so that we can write in bold letters and can be visible from a distance. And to write down, we'll give you 10 minutes, and then two volunteers from each group can volunteer to paste it on the notes boards. And our pension office team will also help you to create the boards. Once the boards are complete, we can all walk around, we can go there and see the boards and see what we created, what's on the boards. Your messages could look something like this. For the blue ones, it should be something positive, something we already have and appreciate about our financial sector, and something that we want to improve on the orange ones. And our final boards should look something like this. So let's begin. We'll give you 10 minutes to write, and your time starts now. Assalamu alaikum. The notes boards are now complete, and I'd like to invite you all to go and have a look. And also, you can take some photos. We have kept a selfie board there at the back of the hall. You can take selfies with the notes boards as well as the selfie board as well. Thank you. welcome back. So here's how our notes board looks like. From the future, one is full. We have so many things that we want to change. So on that note, I will conclude with some very positive things from our pension office notes board. Thank you.
Thank you, Fazul. Next is a discussion on the importance of financial infrastructure for investment diversification by a panel of experts. The panelists contributing to today's discussion are Richard Mark Davis, Senior Financial Sector Specialist from World Bank, Muhammad Hussain Manik, CEO of Capital Market Development Authority, Abdul Wahid Tawfiq, Chairperson of Divya Insurance, Rifat Jalil, Chairperson of First National Finance Corporation, and Ustaz Muhammad Fizan, Managing Partner from Fizan and Partners. The discussion will be moderated by Head of Investment and Advisory Services of Pension Office, Ms. Aminat Irtiasha. I humbly request the distinguished panelists to take their places on the stage.
First of all, I would like to thank all the panelists for joining today's session. The discussions in this session will be held on the topic, Importance of Financial Infrastructure for Investment Diversification. To begin with, I would like to note, as highlighted by our CEO, prior to this forum, we did have a technical session on the topic infrastructure development in Maldives. The discussions in today's panel will be based on the key areas highlighted during this technical session. One of the key discussions that was highlighted in the technical session is the need for and the impediments to attracting foreign investors to the local capital market. As was highlighted in our pension office's presentation, currently pension office has a high domination in capital market investments in terms of bond investments in the local listed market. We have around 59% of total investments by pension office in the market. For us, this shows that the investor base is very small in the capital market And we see that there can be value addition from having a larger investor base in the market. For instance, it will allow for co-investment and risk-sharing opportunities for pension office. For my first question is in this area, I would like to ask, what do you believe are the hindrances in the legal environment for attracting international investors to the local capital market? Mr. Fizan, from your experience, would like to direct the question to you.
Thank you, Iru. Good afternoon, everyone. MPO CEO, Ms. Sujatha, Governor, Chairman of MPO, distinguished delegates, other panelists, speakers, and other stakeholders related to the industry. Thank you for hosting the event. I would like to first congratulate MPO once again for holding the Finance Forum quite consistently, barring the last 2 COVID years. So thank you for hosting this important conference. And I think we can all agree that even today, we saw that all the presentations by all the speakers were excellent speeches. We used to see a lot of information, a lot of angles, good dialogue, good debate, etc. And I think that's what the forum is all about. Now, turning my attention to the question before us, which is does the legal environment or the legal framework poses what kind of challenges on bringing in international investors to the financial markets? I think the question is not as simple as it sounds. I think there are, to some extent, there are about 3 or 4 factors affecting that issue. I think one of the key factors is the legal framework in the country, the relevant legislation and so forth. I think a second issue is the enforcement issue, which I think some other speakers have also highlighted in their speeches. But I think also a related issue is trying to see those issues against the market realities which are existent in the capital markets or the financial markets and so forth, and then making policies which are more or less responsive to that. Just to start off with one of those aspects on the legal front, again, we have heard many interesting things as to the legal challenges in the financial sector and so forth. I think if you look at the Maldives financial sector, let's say lending by even private banks in the Maldives, which of course lenders, when they lend their capital to borrowers for either resort development or whether it's for real estate or any other thing, they're making an investment. So if you look at the lending market, again, Maldives is a good example, very successful, I think still able to attract a lot of capital into resort developments and so forth. But if you look at, for instance, what is of risk to lenders or capital providers, what is very obvious is in the biggest industry in the Maldives, let's say tourism, it is quite still difficult to, let's say, enforce on defaulted loans, enforce the head lease mortgages and so forth. There are some legislation, but it's quite basic, like the Mortgage Act, quite basic, and also even the grant of rights regulation of the tourism industry is a good piece of regulation, but still I think it lacks certain provisions and processes to really give confidence to, let's say, lenders who are putting their capital into these development sectors for them to be assured of their capital, return on their capital, and so forth. I think that's a critical part. Many things can be done. Something related to, let's say, the mortgage regime or the securities which are frequently given to, let's say, lenders or investors. I'll take the example of land in the Maldives. Again, a very scarce commodity, but very valuable, big part in economic development. When the Land Act was introduced, I think that was year 2000 or 2002, it came with a host of regulations even on things like mortgaging, what happens in a default. It created registrars for actually regulating those mortgages. It even specified how actually it can be sold off by public auction and so forth. And what we're seeing is now banks frequently lend to construction, lend to real estate and so forth, because that sector, at least some of this key legislation or let's say, regimes have worked quite efficiently such that banks and financial institutions have the necessary trust to keep lending to those sectors. I think the same could apply very easily to even other sectors in the financial market. Resort lending, for instance, I think there is frequent complaint by some of the developers trying to get project financing. And I think those things could very much be unlocked if, let's say, even in the hotel industry, if, let's say, the mortgage provisions, foreclosure regimes, those things can be beefed up, can be amended, remedied to really spur further investments and so forth. We've also seen other good examples of where, as a regulator, let's say tourism industry, where as a regulator, the government has created new legislation in the past, let's say in 2012, I think grant of rights, not grant of rights, the strata title regulations were introduced. And that saw actually a whole new market emerge. Villa sales, sometimes we see individual villa sales being sold for $3, $4, $5, even $10 billion. It's mortgageable, it's registrable, and so forth. And that was used by some hotel operators or developers as seed funding for their next development and so forth. So, yes, there is very much, I think, a relationship between legislative reform or regulatory reform with spurring investments, even foreign investments, into the country, even in the, especially in the financial sector, I think. I think even this government has taken very good steps, for instance, with the changes or reforms to the tax regime. One thing we saw very early in 2019 was to make quite substantial reforms to the tax regime, which made it more investor-friendly, more business-friendly, and so forth. So we have seen, I think, some legislative changes, some regulatory changes as well, like changes to the Maldives Supreme Court, for instance, made a couple of years ago. As lawyers, I think most litigators agree that we have seen a substantial progress in the kind of decisions, reasoning, or even the speed with which commercial cases involving, let's say, lenders or investors into the country are dealt with fairly quickly. So I think, yes, to a large extent, regulatory framework, which plays a huge role in the financial infrastructure, I think that does play a big role in actually giving confidence to investors. But I think there are maybe one or two other factors as well which we must examine together with that. I think, for instance, if you look at pensions and investing in the pensions fund, the legislation pretty much restricts investments in a few asset classes, and that's quite sensible, and that's what happens in most countries. Most pension assets or fund is invested in capital markets. But here, from the many presentations, we all know capital market, I think the size and the activity is not as much as is desirable for an institutional investor. So I think there are market realities as well, which we must actually take into account when we formulate policies or when we make legislative changes and so on. I think one of the things which I have heard from the previous speeches related to, let's say, the scale, the size of the country, I think these are also factors we must take into account in realizing the potential for making changes to spur further investments. In short, what I'm trying to say is that if you look at the capital markets we have here, for instance, the incentives to go to the capital markets in most of the larger economies, let's say like the US, as we saw in some of the presentations, China and so forth, when companies or startups grow to a certain stage and the amount of funding from private banks is not enough, let's take Facebook, let's take Apple or whatever, then they grow to these capital markets and either through equity or debt instruments, they raise additional large-scale funding. I think one of the factors here is always, let's say, the biggest players in the market, for instance, resorts, investments in real estate or construction and so forth, through their own, let's say, equity base or through private lending and so forth, they can do their projects. So I think one question we have to ask is, irrespective of the legal framework or the enforcement framework, what is the incentive for, let's say, these large players in the largest industries in the Maldives? What is the incentive for them to go to the capital markets, which requires them additional compliance, which requires them to do a lot of disclosures, open themselves up, and then after doing all that, what additional benefit are you getting? If you can satisfy your demands for capital under the current financial market, what additional benefit are you getting? Are you getting lower borrowing rates, for instance, if you compare the cost of capital, etc.? Are you getting longer duration and so forth? I think there must be some incentives for those players to go to capital markets, which may not be the same as for a lot larger countries or a lot larger economies compared to Maldives. I think those 3 or 4 factors are combined. I think that was the point I was trying to make. Thank you. Thank you.
I would like to ask Mr. Manik from CMDA, regulatory-wise, are there any restrictions for foreign investors to participate in portfolio investments?
Thank you, Iru. And thank you for MPA for inviting me for this forum. I think we have to first realize that we are in the pension forum, and we speak of the pension fund and the difficulties they have in terms of placing their funds in investments. Now, what we have here is 19 billion, right? This is the number that has come out. And then Governor basically in his speech mentioned another number. It's the bank deposits, if I'm right, he said something in the range of 24 billion. Now, if you look at in comparison, this 19 billion and 24 billion, the pension office assets, I would presume, is growing at something like 1.5 to 1.8 billion rupiah a year. So within 3 to 4 years, the pension fund is going to hold more funds than the banking system put together. So you have to basically think something about this. So that's why we are here. Incidentally, I was for some time in pension office. Now I'm in the capital market side. So answering Iru's question, what are the legal impediments? I think we've been, from the CMDA side, we've been trying to ease what you call the regulatory environment as far as the regulations, current regulations are concerned. We've been trying to do that for the 1.5 years I've been there. And our chair is there, some board members are here. So I think they are encouraging us to start the development, market development as a, what you call a priority to make something happen so that we have something to regulate. Now, regulations can be there with nothing to regulate. It doesn't work for anybody. So we have to basically rethink the whole process. And directly getting into Iru's question, we have identified basically just 2 areas that I want to mention today. I think we have here long-standing market, secondary market involvements like Ocean, Nurban, Fa, and they are here. They can answer this question better than me. I'm a recent addition to this side. So what we have basically identified is, now the company law has certain restrictions in terms of what you call how companies operate and investments are guided. The foreign investment law has certain restrictions there that are placed in terms of how the foreign investments come into the country and how it is managed. Now, it is what you call unfortunate that Wissam was not here. I think she should have basically highlighted those questions if she had been here. But what I'm trying to say here is now, if foreign direct investment requires that every foreign investor be registered first in the license in MED before he can do business in the country. The company requires that you be a registered company before you do any business in Maldives. So these 2 things, now you look at the capital market side, we are not looking for big investments in, certainly we are looking for big investments, but capital market side is looking for basically investments that come in not as a foreign direct investment, but certainly looking from the idea of a foreign portfolio investor, as you might basically have heard of. So foreign direct investment and foreign portfolio investments should be treated separately. It has to have certain distinctions in the law that requires the secondary market to operate efficiently, clearly, and what you call with minimum fuss. Now, you might have some investments that are coming, foreign direct investment, be registered and gone through so many processes. So, I think that those are the two main impediments I can see from there may be more, but certainly these are the two main things I see that we have to make sure that we do this. And for capital market to function properly, these things should be clearly defined in the law and the regulations. I think this is already happening, but the bills are in Parliament. We don't know the course of action, how long it takes. But from our side, with the permission of the chair, I would just say we are trying to work around even these legal difficulties to facilitate things to happen in the market side. So the board is willing to look into it, how best we can facilitate these things. And certainly we are there to make something happen in the market. Thank you.
Thank you. Thank you. I would like to ask Mr. Mark, what are your views about the benefits foreign investors can bring into a local capital market? And what might be some gaps that might hinder foreign investors to come into local capital markets?
So the second part you said, well, what are the...
What might be some infrastructure gaps in a country that might drive off investors from countries participating in the capital market of a country?
Yeah, I think from a market size view, in general, I think it's a good thing to attract the foreign investors. It will have the effect of, because of the small market size, it will help bring additional buying power, let's say, into the market, which could help with secondary market liquidity, which then has a knock-on effect on the primary markets. I think it can reduce cost of capital, especially for SMEs. And so there's a number of benefits. I do think, as I briefly mentioned in the presentation, I do think there needs to be some care exercise just because there is a possible increase to volatility. Capital market, or rather foreign investors have shown a tendency to jump pretty quick when the going gets rough. And so that happened during the COVID pandemic, early couple weeks. And it happened again early part of 2022. I saw a figure, something like 50 billion was pulled out of emerging market bond funds in the first couple months of 2022, just because of the rate dynamics and everything that was going on. So I think it needs to be done with care, but in general, it could be beneficial. What are the impediments? I'm not going to know those as well, but I'll speak generically. In generic terms, lack of protection for minority shareholders is often going to be an issue, where they're not protected, they're not given a voice. Credit law and how creditor protection might work could also have an effect as well.
Thank you. If you'd like to add, Mr. Rifat, on what do you think are the current legal requirements or gaps in the market for attracting both domestic and local investors into the local capital market?
Thank you. Yeah, that's a very interesting question. Just like Fizan has pointed out and Maniku has pointed out about certain restrictions that we have. Especially, I also note that for foreign capital to come in, especially for portfolio investments, Fizan quite rightly pointed out about the loans that come to Maldives and how difficult it is to enforce, recovery and things like that. That's one of the major issues. In terms of portfolio investment, like Maniku has said, that's going to be a major game changer. We see it as a major game changer. And I understand that there is work being done by the registrar and together with the CMDA in terms of facilitating direct foreign investment in portfolio investments. So as we all know, the number of foreign investments that come to Maldives is generally in the area of tourism and transport. Major investments have come. We all know that major funds have invested in Maldives. Major large companies, international companies have invested in the Maldives. From that we know there is some form of validation we are getting that they obviously would have done their due diligence. Otherwise, they would not come and invest in the Maldives. We have the basic frameworks in place. We just need to get certain regulatory barriers removed and certain legal laws put in place to address those issues, concerns of the foreign investors. I think we are just seeing the beginning of a major change in the landscape that we are operating in. We will see a lot more investments coming in with the changes that we are seeing. But we need more speed, more commitment, and a more concerted effort from all the parties involved. You wouldn't have seen any major private sector players other than the Maldives Stock Exchange operating in the capital market space in the last many years. But we have also decided, we are very passionate about changing the financial sector, especially the capital market landscape. So we look at it very positively. Sometimes, we notice that there is a lack of laws and regulation in certain areas, but we see that as an opportunity. But we don't look at it to exploit it in a negative way, but we try to move within the legal framework and see what can be done. And then once we see a necessity for a law or a regulation, we talk to the relevant parties. So the future for foreign investments and domestic investments is, in our opinion, very positive. We need to mobilize the funds. There is plenty of idle funds in the banking system, which needs to be mobilized. Once they are mobilized, we will see a lower cost of capital, which we are talking about for the last 2 decades, as far as I can remember. That's always been a hot topic for the policy makers, reducing cost of capital so that more people will borrow, more people will invest, more jobs will be created, and there will be a better return for the investors. So I see the existing regulatory and legal impediments as a very short-term thing. If we can all work together and we can really speed this up, we can bring about a lot of changes. I will tell you one experience that we have gone through the last few years. The First National Finance has recently launched an electronic platform for trading. And we noticed, the volume of trading has gone up significantly, like the CEO of the stock exchange and CMDA has noted in their presentations. We noticed that Diragu shares, this is just one example. Diragu shares have almost gone up by 80%, I think, because obviously there is limited supply. When there are more people trading, the price would go up. That's natural. We all understand that. So imagine the change that has happened in such a short period of time. There's so much we can do if we can all work together, mobilize the idle funds, take a little bit more risk, and then address those legal issues that we have. Nothing is impossible if we can all give the commitment and speed up this process. I think it will be magical.
Thank you. I think Fizan and Maniku has already highlighted that companies do prefer to go for banking sector loans. Why do you think that? Is it because of complexity in getting listed or getting debt instrument listed? What do you think are the reasons why companies are hesitant to go for the capital market and would rather go for a loan facility?
Thank you. I hope my comments were not misinterpreted in any way. The capital, I don't think any of these companies, even in the Maldives, are averse to the capital markets or going into the capital market. For instance, the stock exchange CEO in his presentation, I think, presented very interesting slides where he showed the returns on stocks and so forth, which are attractive and which is one of the reasons why we all know, for instance, even in the resort sector, foreign investors come, because if you compare what they earn maybe from markets in Southeast Asia, 5-6% or whatever, you come over here with a good project in a hotel sector, you might earn 25, ridiculously high returns as well, despite the risk. I think one of the things we've seen in my time in the MPAO as well and in the investment committee, for instance, Mr. Halim will remember that whenever we've tried to invest in the Maldives capital market, let's say whether it's Dirago shares or BML shares and so forth, we've looked at the returns, yes, they're decent and so forth, but there are other fundamental issues which come up, for instance, like valuation, for instance, isn't it? Because of the lack of activity in these stocks, for an institutional investor, I understand the way in which you analyze investments, again, is different from a private investor, even a very high net worth private investor. For an institutional fund like MPAO, it's not just enough that the return should be high. There should be other things like, fairly liquid market with a lot of activity so that your valuations of your investments and so forth can be reported correctly and so on. So I think the point I'm trying to make is it's not that one is right, one is wrong or anything like that. I think there are a multitude of factors like this which determines who invests where, and as we all know, capital sort of follows where it's most efficient, where it can get the highest return compared to the risk, and also to the extent which is allowed in case of, let's say, institutional investors like pension funds and so on. So the point I was trying to make was having, let's say, advised private sector investors or banks and so forth. It's not that they are averse to going to any of the markets, capital markets and so forth. I think the question which needs to be asked is if they can get their capital requirements adequately serviced through, let's say, private sector borrowing. And we have to recognize that we are not only talking about only 6 banks or 7 banks which operate here. Maldives hotel market has always had a fair share of investments from offshore. I think Mauritius Commercial Bank, which is present here, some faces very familiar with MCB's inception. I think about 10 years before even MCB came here, they were lending heavily to the Maldives hotel development, project financing and so on. Ariel Bank, I think out of Germany, I think their exposure on refinancing good projects, I think the exposure is close to about $500 million. So if you think about it, those are big amounts. If you think about the size of the population, size of our economy, and so forth, those are big amounts, as some of the panelists have highlighted already as well. We've seen large investors like even, let's say, I think Blackstone and the TMA, which has changed hands twice, I think. Yeah. And we've also seen other large investors like hedge funds and so forth even come. I mean, it's not so often. I think the issue we're talking about is also the frequency with which we can attract large-scale investments. Some of the projects which we've been involved in have actually tried to even attract, let's say, investment banks and so forth to hotel projects. And one of the questions which is an eye-opener for us, considering the deal sizes here, is those large investors and so forth, will not want to come, even if everything is great and so forth. They will not want to come unless the deal size is $500 million or $1 billion. It just doesn't make it worthwhile for their due diligence and processors to. So again, it's nothing wrong with the investment per se. It may be the scale and the sizes of investments relatively that we're talking about in the Maldives. So I think the point I was trying to make was Maldives must be analyzed, I think, in its own unique ways as to its size of the population, size of the market. There are many things which can be done, and there are many positive signs, as some of the other speakers have said, in all the sectors, in all the areas, even in the stock exchange. I think there's good participation considering the Maldives sector, but I think the question needs to be asked how you can attract or incentivize these players to come into the stock market. Maybe if, let's say, we talked about let's say, T-bills earlier in one of the presentations. If the T-bill rates are high, which is taken as a base, then obviously private lending and so forth, those rates will be higher. And it's a reflection of that plus the inherent risk in the system. So I think these fundamental risk issues also need to be addressed before we can talk about lowering the cost of borrowing and so forth. So there are a lot of interrelated, I think, areas which are factors which may actually play a role in bringing investments. One of the points which I think Mr. Manik took earlier, for instance, regarding the portfolio investments and so forth. I'm not entirely sure with the reforms in the Companies Act. I think there was extensive reforms proposed to the Parliament on the companies legislation, and I'm not sure whether that issue has been touched upon, but from experience, I think that issue will get resolved because even previously, the Registrar of Companies has made exceptions to, let's say, investors in hotels where you just stay as a shareholder, you're not actively involved. Then even previously, some of the filing requirements, reporting requirements, or even tax-paying requirements have been eased in the past. So I think those kind of changes are quite possible as well. I think we'll have to see how the Ministry of Economic Development deals with those issues. Thank you.
Mr. Waid, if you would like to add, as an insurance company, you are also seeking to match your assets with liabilities, term-wise, tenor-wise. What are some of the things that you feel like are impediments in the market for getting long-term investments from the capital market?
Yes, I think in the insurance industry or for any other industry, for the investors, there should be good investments to invest in. And I think if we consider the investment climate, we can say in Maldives I would classify the Maldives economy into two areas. One is the tourism sector and the local sector, because it is so much different. And I think one of the main reasons that we need, to have the good regulations, to make it conducive for the investors, that is very important. Because tourism sector has developed many regulations, which for many years it has come in such a way that there is more security for the investors on the long term. The policies are more consistent. I don't know whether Fizan will agree with me on this, but I would say compared to the local business landscape, the tourism sector is very far advanced in its regulations. Just for a little example, if you want to rent a land to do a business in some place, Male or at the other place, you'll get it for a very short term, like 5 years, and or 10 years, and you don't know how much the rent will go up after that. But in the tourism sector, you can safely set your investment benchmark for 99 years, and you know what's going on. So I think when we want to do the investments, these regulatory changes that are conducive to the market, they need to happen very well. And many people say that there is no good investments to invest, but I mean, there are good investments to invest, but the unpredictability or the volatility of it is also governed by by many times by the government policies. For example, apart from the insurance, I'm also involved in the fisheries sector as well. And even in the fisheries sector, it's very unpredictable how the government policies are. For example, I'm having investment where we have, through our company's strength, this is from my personal example, I can say that through our company's strength, we have borrowed funds from overseas, from Germany, to develop the fisheries factory. And we have finished the investments and we are doing the business. But later on, the government policies for the fisheries sector keeps on changing. And, there is very little security how the market is going to go. So I think investors will invest when there is good security, especially the large investors. They will not make the large investments until there's a very good due diligence they can make, and they can forecast the profits for the future. And the institutional investors, they will need their security. I think this is one of the reasons pension fund is also not investing in the private sector, even though maybe this could be one of the reasons. But I think we need to take an initiative somewhere that even if there's a little bit of risk, I think the pension office having that large fund base should take some initiative to invest in the private sector, because I was looking at the chart here and most of the money is coming from the private sector also, So I think this is something, at least as a token, something should be done. And then actually now the private sector is feeling that pension fund will not be invested in the private sector. That is the feeling from the private sector. So if there's any one token, one initiative, I'm sure many other investors will approach the pension office for investment. And this is the kind of this is the kind of initiative and good energy we need to have to make this a very good investment climate, and to for all the investors who need the money to get some funds. Yeah, thank you.
Thank you, Wahid. One of the other discussion points that was raised in the technical sessions was the importance of information infrastructure to measure risk and uncertainty in a market. It's specifically questions about centralized registries were raised in the technical session. So I would like the panelists' view on how established public registries, such as collateral registries, could help, could be advantageous to the market players. Mr. Mark, if you would like to.
So they definitely can be of much assistance. The fact is that most loans, as they're extended, are going to require collateral. The World Bank does these enterprise surveys, and I think the figure was like 75% of the bank loans that they surveyed were the kind that required collateral. But you look at SMEs particularly, and in general, the 75, again, 80% of the collateral that an SME possesses would be of a movable collateral kind of variety. So not land, not something that would be easily attached with any sort of lien. And so there's been quite a bit of work. It's not our group specifically at the bank, but it is other groups that have a special focus in helping, coming alongside in other countries and creating these registries that have been pretty successful. I was looking at the data, and there had been a great example in Colombia where they'd been able to create a successful collateral registry. I think they extended in the wake of that 100,000 new loans. Now, still not a lot were to SMEs. It was about 5,000 that went to SMEs, but it was over $3 billion US, I think, in value for those 5,000 SMEs. So it was making a difference in Colombia. So I think it definitely can be a great tool to use in enabling, especially small and medium businesses, to have access to credit where previously they did not.
I would like to ask just regarding information infrastructure again, what kind of developmental limitations are there in the formation of such registries and how best to approach this? If CMDA would like to address.
I don't know whether I can directly answer that question, but we might have to call on some of the people who are basically keeping the registries together. I think what is happening is, generally speaking, I think each financial institution, the banks have their basically KYCs to that. MMA, financial institutions have certain restrictions. MSC, I think, in discussion with us, has a certain SCs. And so there are several regimes and several instances where customers have to fill in their KYCs altogether. And MMA today announced that they are working towards a centralized KYC once that is in place. I think that would basically help a lot of us to basically, it makes, I think, the work so much easier. But I think the concept of a single registry is certainly, I think, accepted by all of us, and that will help us to bring in. Then now we are struggling, for example, in terms of getting the portfolio investor regime in place, framework in place internally. But where do you have that register? Whether it's the fund managers who want to keep that KYC in place, or is it CMDA who wants to create another registrar for the foreign portfolios that are coming in. Under the current regime, we have to get a permission from the Ministry of Economic Development to register that investment first before he can do any business here. So that kind of cross restrictions are there. But once this central KYC is in place, I think that will help a great deal, and then makes it so much easier from our side, CMDA side at least, and MESSI's as well. Yeah.
Mr. Manik, if I may say so, suggest, do you think in your role in CMDA's capacity, the role of developing the capital markets and the role of regulating the market, do you think it should be separated? Do you think that will make things more efficient? Sorry to put you on the spot.
Interesting question, Fizan. I think the Capital Market Development Authority, by definition, is a development authority. But then we are also under securities law mandated to regulate also. And certainly, why not MSc as a development institution? This is just off the head, business development. But we are working together in that sense. Currently, I don't think we can say it's not the work of the CMDA not to involve in development, but certainly. So we wear two hats. At the moment, we have to wear two hats. But that hat had to be worn correctly, I guess, when you discuss these issues. So we can't mix these both together, but we have to keep the development effort separate and the regulatory asset separate. And I'm really happy that the recent developments that has happened, for example, is contributing towards positive sentiments for the capital market. For example, First National has not only been a broker in terms of engaging in share trading, but they have already started a fund. And they are doing it now. So we have licensed fund managers who are supposed to do this. We want more to happen. So we want more people to start businesses, and that is like the Vienna platform, it's there. As a regulator, we are promoting this, and MMC is promoting that one. We want someone to be there and do that, something should come, and then only you can have the confidence. For that angle, I think on the development side, I have been pushing, I think it's good Fizan pushed me in here now so that I have to basically say something. Now, the market side has been, in terms of what you call, I would think more development could have happened if one sector proactively, if we have gone to develop that one. Now, I have been always arguing that state-owned companies should list. It's not necessarily for the requirement of funds, but the main issue is basically transparency and accountability. Now, anyone who basically, on the road, if you ask, SOEs would, 90% of them would say there is no transparency and accountability in terms of running these companies. So why not do that? It's something that could easily be done. It doesn't have to be an IPO. It's just list and make that reporting framework in such a way that you are supposed to be, you are required to be report. You are required to report correctly. And any corporatization effort on the part of any corporatization, there is a, what you call incumbent responsibility on the board of directors to report. That has to happen. So why can't we do that, for example? It's just an example out of thought, but there are difficulties in doing it. I know, I can understand. The privatization board is working on it. I know for sure that they are there. So these are things that have been and it will certainly have a positive impact on the capital market. And Mark has just, in his speech, he said, there are 5 things that bring positivity to the, what you call, in terms of 5 positives that are in the capital market side. One is the SDGs, achieving the SDG goals that we are espousing to be. So you have to empower the, what you call, middle class or the lower class. If you are to achieve the SDGs that we have signed on to, just doing big businesses in a country, it doesn't help. If you try, you have to basically empower the, and one way of doing is, I truly believe if we have, what you call, if you can share the wealth of state-owned companies with the general public, you can do that. There is an opportunity here. I think dividend should not be seen as an income for the government. You should not be looking actively for that. There is a better way to manage that one. If you activate the businesses, there is going to be tax that will indirectly come into place. So
Thank you, Mani.
Mr. Rifat.
Thanks. I wanted to add to the issue of the centralized land registry, the concept. It's ironically, in Maldives, we all know that land in certain areas is the most highest valued asset. But in certain parts of the country, for mortgage purposes, it has no value. The Greater Malay region, obviously we all know that the land is so valuable that the first asset that the banks go after is the land. We need to find a way to be able to collateralize the land that we have throughout the Maldives. It may have different values, but it may not be the same value as in Malé, but we need to find a way to do it. Imagine hundreds of people with land, but it has no value when it comes to mortgage purposes. If we are able to convert these assets into mortgageable assets that has real value, which can be used to generate additional investments. Imagine the kind of change that we could see within the country. So together with the centralized land registration system that we're talking about, it's equally important to find a way to bring value to the hundreds of plots of land that we have throughout the Maldives.
Thank you. That was one of the main findings of the technical session. Who should take the responsibility for creating this registry? Which government organization will be in charge of compiling this? And I think some of them suggested that it should be MMA. I think maybe a key deliverable of this discussion, maybe we all discuss one institution.
Thank you. Just to clarify, I think, again, from our experience, I think it's not the non-existence of registries. I think there are different regulators. I think Maldives was such a small country with so small land. For land, we have the Land Act mortgages. For resorts, we have a different regulator, the Tourism Ministry. For land, it's the municipalities or the island councils and so forth. And even in the Transport Ministry, I think for vessels, there is a mortgaging regime. But I think it's not the non-existence of these regimes. I think it's how they are managed. I think whether there are good regulations, practically enforceable measures, which are there to give confidence to investors that once you register the security, it can be perfected, it can be enforced fairly quickly and so forth. I think the problem is what Rifat just mentioned as well. When you deal with land, there's like thousands, a lot of islands, hundreds of islands. How do you manage that kind of process where actually there are so many registrars? So one idea may be to bring it all under one roof. I'm not sure how practical it will be for MMA to manage, because the legislation and the applicable regime for these different types of land are quite different. What applies for resort land or island leases are quite different from what applies to private land, or there's bandara, state-owned land, and so forth. So I think it's also trying to see how you can organize these different systems of ownerships and leasehold long-term interests, and then more or less bring the registrars together to create a better enforcement process. I think that's what at the heart of the issue.
Thank you for the input. If you would like to add,
Yes, just to pick on what Fizan has said, I think the different type of mortgages, because of this ambiguity in the regulation, many financial institutions they do not they have their preference to which land they can mortgage. Even in the business that I have been doing, I have noticed that in some banks, some of the lands they are accepting, some banks they are not accepting. So we have to have this consistency of the regulation, so that all these lands can be used to capitalize and to be used in the mortgages.
Thank you. One other area that I would like to touch on, which was highlighted in the session, was the role of a treasury market, a market mechanism for the treasury debt instruments in creating benchmarks for the capital market. So my question is, what role do you think the treasury market can play in financial market development? What are your opinions about the treasury market developments leading to liquidity creation in the capital market? Mr. Maniko, Mr. Mark, Mr. Manik, please.
Yeah, thank you. I think Mark can better answer the question, but I will try to say my opinion. Now, I think treasury instruments are integral part of the market as it is. There is a primary market and the secondary market part of it as well. We haven't basically been to the secondary market where treasury products are concerned yet. But I think that even that work is being undertaken now by the Ministry of Finance, and us, we have now almost on the verge of engaging a consultant to develop the secondary market aspect of the treasury products that are coming in. So, I mean, today, I think the governor said, oh, it's MMA, 10,000 is the investment. So it is already structured. Basically, the public can participate in the treasury products as well. So, and when it happens into the secondary market, it certainly facilitates a lot more. So that part is being addressed, and we are working towards that one. So there may be some, what do you call, some time before we get there, but I think it's going to happen. Yeah, it is positive. Thank you.
Yeah, I mean, the treasury market is ultimately going to be one of the very key building blocks to the development of the rest of the capital market. My colleagues in the long-term finance team that focus on capital market work would tell you it's like, I said a few minutes ago, there's no right way to sequence, but treasury bonds almost always come early. And they have to be there to provide the pricing for a lot of the other instruments that come later in the process. So, having an effective yield curve is a big deal and is very helpful, and enables other instruments to be priced more effectively, so that I think people are more willing to then take on some of those intermediation costs and those informational friction costs that sometimes keep the capital markets from developing. So I do think they're very important, and they, although they won't come exactly in the same place for any given country sequence, they should come early, and they're an important building block that the rest really depends on.
Thank you. As the last theme of today's discussion, I would like to highlight on the role of intermediaries in channeling savings to borrowers. On this topic, Mr. Rifat, if you'd like to add.
Well, thank you. Yeah, our experience as an intermediary is a good example of how we could bring a change in the capital market, I think. As an intermediary, we could act as an investment banking, firm. So what intermediaries can do is bring the issuers and investors together. So that could be in the form of debt, structuring of debt for issuers, and marketing the debt, and also assist companies go public and raise equity in the capital market. So, and there are many other options as well, but these are the two main areas where a large part of the finance that's been raised in the market is through various debt instruments and equity. And I think in the Maldivian financial sector, I think we'll see a lot more happening in this regard. I will just let you know, we are in the process of raising a substantial amount of funds for a client, and the process is happening. And if that becomes successful, that will be a success story. What we know in the Maldivian context is a lot of people will wait and see how it takes off. So once a successful project is launched, many people will gain the confidence, and you will see a lot more coming out. We have been approached by a few very high-profile private sector companies, which previously did not have any interest in raising any money from public, but now the clarity is coming to the market. People know that this can be done. There are people, not just us, there are others who are in this business now. So we will see a lot more happening in the capital market, and financial intermediaries will play a very significant role in the future. And you will see, like I said, a lot of competition in the market in terms of interest rates, which is good for the country, good for the businesses, good for everyone.
Thank you. Mr. Maniku, then I'll hand over to you. Go ahead.
Thank you. Just I want to add on to that one, just to promote ourselves for just a minute or so. Because CMD, I think, gives a lot of what you call priority towards development of the intermediaries. In fact, we are the authority that licenses basically the working and the intermediaries, advisors, Sharia advisors, investment advisors, brokers, dealers. So they have to have a certain minimum requirement before they are required to what you call engage in public investments and private retail investments. In that sense, I think we have basically positively prioritized this area for development next year. In fact, Fa was with me when we had the budget discussion with Ministry of Finance just now. They normally don't give what you call what you ask for. They always deduct and go down. But this time, I mean, we don't ask for much. I mean, that is, we ask for very little. But even then, they refuse, not refuse, but they are pushing us down. But this time, they have committed to give what we ask for. And one condition is that we develop the intermediaries. So we are basically going to work towards the development of the intermediaries in the market. We will have training courses and other what you call expense. We will spend more on development of the market than last year or the year before. So we are in a good position towards what you call creating that intermediaries and advisory service in the market. Thank you.
I would like to give Mr. Wahid.
Yes, just to add to what Mr. Madik has spoken, I think coming from the insurance industry, I think insurance industry is one of the finance sector industries where the role of intermediary is very much progressed. MMA has licensed more insurance brokers and agents than the insurance companies. And the amounts of business that they have been doing has steadily increased. And I think currently about 50% or more of the business in the insurance industry is done through the intermediaries. So they are very effective in matching the clients to the insurance products offered by the insurance companies. And I think insurance sector, even financial sector being a sector where the financial literacy is not so much aware amongst the customers, it is very important. And I think this is a very good step that the more intermediaries, they will definitely not only increase the knowledge, but they will also lobby with the investors and also with the regulators as well, to create a better marketplace, more conducive for the investments, and also really make a more investment matching as well. Thank you.
Mr. Fizan.
Yeah, thank you. I'll make it very short, I think. I think we all need coffee. But just to tie a bit of everything which was said by each of our distinguished panelists, talking about the role of market intermediaries and how they can help. I think we were talking earlier about how private sector needs can be met by institutional investors. And I think even the CEO of the stock exchange was talking about how to increase the participation. I think with market intermediaries, one concept, for instance, which CMDA, which the stock exchange and so forth, can look into is maybe introducing few concepts like accredited investors and so forth, which will enhance the pool. I think even in Maldives, there will be quite a lot of people whose net worth is more than $2 million, high net worth individuals, and so forth, who, if you can bring into the market through even, let's say, market intermediaries and so forth, you will be expanding the pool of investments. And through, I think, the new program, Vienna, I think that can match, for instance, what you were talking about, how institutional investors and private sector needs can be connected together from the investor and the issuer side. I think that is something which perhaps can be looked into by the stakeholders introducing these concepts. Thank you.
Mr. Rifat, if you'd like to final comments.
All right. Yeah, we would like to actually point out the support that we get from the important stakeholders like CMDA. The team there has been amazing, so supportive, and they will go to, great extents to help us streamline things, advise, and also the speed at which they help us is commendable. We would like to thank CMDA for playing such an important role in the development of the capital market and the Maldives Stock Exchange. We work very closely with them. Their support has been very, very, very good. And pension fund, we work very closely with them. We share information about the products that we are developing, etc. And we noticed that the stakeholders have been very supportive, and this is what is basically needed for us to move at the speed that we have to go. MMA has been very supportive. Even today I had a discussion with the governor, and he was asking me about what the issues that we are having, and he is willing to push through the government any difficulties that we have. And it's a very positive thing, and I think if we can work together, we can make a lot of a major difference in the capital market. It's nothing is difficult, nothing is impossible. I think if we can work together, it's going to be a really good time ahead in terms of in the financial sector.
Okay. Mr. Mark? No. Okay. Now I'd like to open the floor for the audience to direct questions. If you may have any questions, you can also submit questions through our online chat. We will pass around the mic if there are any questions.
My name is Imad. I'm from MMA, Maldives Monetary Authority. I've been taking quite notes from this forum. I think, first of all, I would thank Pension Authority to organize such a forum. So I think everybody is in the regulatory framework should be able to embed those concerns raised by the private sector as well as the other regulatory bodies. I think collaborative effect is really, really important. So I think today what we are trying to figure out is how we can increase the financial intermediations within our systems. So there are a lot of excess liquidities tied up doing nothing, so doesn't have any economic value in it. So how we can bring those funds to make it in a positive way, the very much needed for these countries' developments. I think in terms of fund requirements, I think it's huge if we consider the most of the sectors, even if we consider the tourism sector, construction, retail and wholesale, construction. So everyone is looking for funds. I think the role of intermediary is quite important in terms of bridging those who have the funds and those who are in need of funds. From central bank of point of view, I think we would like to hear from the panelist side. Most of the hindrance that I have seen from the legal side, Fizan, I think I would like to hear more on those specific, the regulatory framework, the gaps in terms of we are referring, I have a little bit heard, most of them has already highlighted the enforcement process is quite weak And is it just because of the existing regulatory framework does have an extensive gap in those areas? So how we could, going forward to address these issues? Yeah.
Thank you. Thank you. I guess what I was trying to say was is pretty much every member in all the other panelists or other speakers were saying. These challenges can be viewed as opportunities for improvements and for making substantial progress. I took the example, for instance, on the land regime, whole gamut of land ownership, securitization, and using it for spurring economic activity or investments. We saw the legislation in 2000, around 2000, and we've seen the benefits of it, and we've seen how actually that has brought more lending, more investments into, let's say, construction or real estate, or even the last, I think, only 10 years, we've seen the condo market boom in the Maldives for the first time. I think similar things could be done for the hotel industry. When I say this, hotel industry already in the Maldives is one of the best markets in the world. Most of the biggest luxurious brands are well represented in the Maldives tourism sector. There are substantial players here, different kinds of funds, although not in high numbers. So there's a lot going on, good returns and so forth. But I think one of the things which may have been ignored in the past was that, unlike, let's say, land mortgages or enforcing a land mortgage and selling, which is quite well established now, all banks, I think especially Bank of Maldives, is quite regularly in the process of auctioning land and so forth. So that kind of frequency is not there in the hotel mortgage market, let's say, at the moment. Considering the millions or in total billions of dollars which are invested by lenders or financial institutions in the, let's say, Maldives resort sector, it's fairly difficult to enforce a mortgage. For instance, we know of some default loans where the lenders have gone after defaulted borrowers for more than 5, 6, 7 years through the whole process of litigation. And then even after that, there's all kinds of challenges with enforcement courts. And even if you get a paper judgment at the end again, it is a battle to get it enforced, get the property on the market, you know. And while that time, remember also, unlike land, for instance, in the tourism sector, it's all long-term leasehold interests. Started off small, 5, 10, 15 years, to 35, 50 now with the option of 99 years. But still, let's say some of the old resorts which have taken loans and defaulted, when banks and lawyers to enforce the loans, by the time the litigation finishes, you have 10 years left on the lease. Now we have to ask what will be the value of a resort with a 10-year lease remaining, which is underdeveloped and which maybe the borrower has taken the money and run away. So even if you have a paper judgment on your hand after 5, 6, 7 years, you have nothing really to go after. So I think those kind of gaps can certainly be remedied fairly easily because there is a land regime which has been in place for a long time. We're talking about mortgages, so although it's leasehold interest, pretty much the enforcement process could be the same. So instead of full ownership of title, we are transferring the head leases from the defaulting borrower to the... But the process needs to be legislated further, more detailed regulations. Tourism Ministry perhaps as the regulator. As Mr. Manik said, Tourism Ministry also wears multiple hats. It is the lessor of all islands. It is also in charge of developments. It's also the regulator of all mortgages and so forth. So in their hat as the enforcer, let's say, of hotel mortgages, I think it's quite timely that, considering that many lenders have even stopped lending because of their lack of confidence in the resort enforcement process, I think if they could speed up the regulations on it, beef it up, and create a system just like for land where actually investors or lenders can recover their capital, can recover their returns or whatever in cases of default a lot more quickly. I think for any lender, 5, 6, 7 years or 10 years is probably not acceptable. So we have to recognize that banks are in the habit of lending. That's how banks earn money, earn their income and so on. So they're pro-lending, but they wouldn't lend if they don't have any protection on their capital or getting their money back. So resort sector, especially I think, being the biggest sector, I think there's one area which the government could, any government could perhaps look into more closely as to how to beef up the mortgage enforcement or foreclosure processes. There's good opportunity, I think, to make those changes, yeah. But having said that, there's quite good confidence in the resort market. With all those challenges, still we see quite a number of activity in the Maldives resort sector, even with shocks like COVID or even before that, tsunami and so forth. We've seen always the market bounce back fairly quickly within a few years. So the Maldives resort market has been quite resilient as well, and I think that's a reflection of the fairly good returns that most investors, including international investors, get from the market. But having said that, I think those kind of challenges, if we remove, it could spur additional products, additional investors, additional players to come into the market. Thank you. I hope that answers the question.
If there are any additional questions. Yeah.
Thank you. This is just an observation on my part, looking at the discussions that we have had today. Like, what is the future of the pension funds? Because, you know, the pension funds are increasing at an incredible rate. And what is the future for the pension funds when you look at, you know, the means of investment? Now, for example, when you look at the figures today that were shown, most of the funds are in government instruments like T-bills, T-bonds. So when you look at that, what kind of investment opportunities are there for the future of pension funds? Then we were sort of discussing on the side about investing, you know, abroad. But how do you get the dollars? That's the big question. I know Imad is there, so I want to throw this question at him also. That is, you know, something that we've been grappling with. How do you find the foreign currency to, you know, get these investments on board? So I throw this at the panel, and maybe you can, you know, highlight on some of your thinking on this. Thank you.
So it's a favorite topic of mine, and it's one that I realize national pension funds are often looked at as a key engine for development locally. But there's a point where you have these DC funds that soon overwhelm your local capital markets. And if you don't use overseas investment as a bit of a safety valve, you will have a bad situation, a situation that's not good, because the local capital markets will actually be distorted. And they probably already are, to be very honest. They are a little bit already distorted by the size of the pension fund, and it will only get to a degree further. Now, I think the ideas that we're talking about are good, like local infrastructure funds and local other tools, but I think overseas will still be needed. About 2 years ago, I co-wrote a paper on international diversification for pension funds, and it showed that there is additional return that accrues to those pension funds that do invest overseas. So it's a direct benefit to beneficiaries. I'm happy to share that link as well. The interesting, though, finding that we had in that paper, we used OECD data, and they track both the OECD countries and the non-OECD countries that are willing to give the data to that organization. And over time, globally, pension funds in general are investing more overseas, but it was interesting, we tracked pension funds from the date of the last major reform. So, you know, in this case, it'd be 2010 for your system. And so basically what we saw is, in general, as pension systems matured, almost always they did, you know, gradually increase the overseas investment. And I do think it's something that is best done gradually. So begin with 10% as an example. Don't go all the way to, you know, 50%, and I don't think you would, but begin gradually. But in general, a lot of the Latin American pension funds, as an example, gradually allowed the overseas investment proportion to tick up, and Peru did a particularly good job of that. As the system grew relative to the local capital market, it just became a necessity. So I'm very bullish. I'm very much a fan of that idea. One other thing, though, that I will add, and this came from the analysis as well, what we found, we looked in detail at the holdings of some of those Latin American funds, and the ones that were doing it best were just using these massive, passively invested global instruments. So they weren't, like the pension fund administrators in Peru were not trying to beat the market in Europe or in the United States. They were just using index funds because they're super low cost, they give you the exposure, and financial theory says getting the exposure is 90% of the battle. Maybe you might make a little bit extra on the margin, but the exposure is what counts. So when and if that time comes, and I hope it's when, I would suggest just use, you know, one of the passive instruments, the many global passive instruments that's available, invest in the global equity markets, and do it gradually. But I think it's a needed thing, and the data that we pulled together shows it definitely helps. Like up to 1% a year in additional return was the effective kind of outgrowth of what we found. So it's a good measure to take.
Hi, thanks, Mark. I think I would just like to add what you said. What she was also, I think, additionally asking was with a growing pension fund in the Maldives, which is denominated in Maldivian rupiah. I think the other part of the question was, if we wanted to invest overseas to diversify, how do we get USD? Because Maldives has a real problem with obtaining US dollars. Everything is imported. Everybody's fighting for the US dollars. So even if the pension fund, the size is big, getting substantial amounts of US dollars for the rupiah might be a challenge. I think that's an additional thing. I think that there are a few things which, from our experience earlier with MPO when we were in the investment committee earlier, I think there was some interest from private banks which are active in the Maldives, which had certain proposals like they will actually give USD maybe to the pensions fund and get MVR from the pension fund, which they could use for local lending, provided that the pension fund here invest in their securities, in their, let's say, home jurisdiction or whatever. I think those are the kind of collaborations which maybe MPO could explore with private banks and so forth, which has actually fixed income maybe products in their own countries. I think another thing which maybe MPO perhaps could explore is, as we've all talked about, the resort sector, for instance, which may need funding, may want to tap into the pensions fund, but has no direct platform to do so. Some hotel developers even earlier, I think, has proposed to MPA, again informally, that they would like to issue bonds, maybe resort bonds or whatever, for their project finance needs and so forth. One thing I think which earlier BML even used to do was to lend in rupiah and get repayment in dollars. Excellent thing for the lender. But what I'm saying is, like, again, there could be parallels or analogies like that where actually, if let's say MPO could actually purchase bonds which are denominated in rupiah, and then maybe perhaps from the resort sector which gets dollars, get repayments in dollars or something like that. I don't know, provided again the laws support it or whatever. I think we have to find ways in order to get the currency issue also sorted out, and as Mark suggested, maybe start small investments, slowly in other markets in very safe assets and so forth. I think that's the way to go. Thank you.
That will be the last question. Mark, yeah, I'll give you one chance because we're running out of time.
This is just a small point, and I apologize I didn't answer that part of the question. One point is, though, if you can get past the currency issue and you can establish a position, then you actually start to see dividend flows coming back, and that's actually helpful from an FX standpoint, or bond coupons. So if you can get past that initial hurdle, it actually then ends up being somewhat helpful from an FX standpoint.
Thank you. I would like to conclude the session with that because we ran out of time. I'm sure we had a great discussion. I think one major takeaway from this session is that we are all working for one goal, which is financial market development, for which pension office is directly, our growth comes with the financial sector growth. We are trying to diversify our investments. For that, we need the market to grow. As we said, we currently have 60% already invested in the capital market. So I think with this, what we would like to see is that these discussions have paved a way for industry-wide collaborations, and we hope holistic policy developments will come through, will follow with these discussions. With that, I would like to conclude today's session. Thank you all the panelists once again for giving us your time. Thank you.
Thank you, panelists. We hope the discussions were beneficial to the participants. Before we conclude, I would like to call upon the Chief Financial Officer of Pension Office, Mr. Mohammed Shahid, to deliver the closing remarks and the vote of thanks. Please welcome Mr. Mohammed Shahid.
Assalamu alaikum. Good afternoon, ladies and gentlemen. On behalf of the Pension Office, it's my pleasure to make a few closing remarks and express our appreciation to all those who made this event a reality. Back in 2012, we initiated this forum to create a national platform for deliberating on issues related to the financial sector developments in the Maldives. After a 2-year gap due to COVID-19 implications, we are back in the business. We are determined to continue this event as the #1 forum for leaders of the Maldives finance industry. This event becomes successful with your excellent cooperation, to whom we owe a debt of gratitude. We would like to thank the Governor of Maldives Monetary Authority, Mr. Ali Hashim, for taking his valuable time to honor this event as the keynote speaker. We are also grateful to Mark Davis, the senior financial sector specialist from the World Bank Group, visiting Maldives for the first time to share his experience as the international speaker and an panelist. The importance of financial infrastructure developments in the Maldives has been extensively deliberated today by the expert speakers, presenters, and panelists from the country. Mr. Mohammed Hussain Manik, our former CEO, who has pioneered this event 10 years ago, now the CEO of Capital Market Development Authority. Mr. Aushan Latif, the CEO of Maldives Stock Exchange. Ms. Shujata Halim, our CEO of Pension Office. Ustaz Mohammed Fizan, the managing partner of Fizan and Partners LLP, Mr. Abdul Wahid Tawfiq, the chairperson of Divehi Insurance, Mr. Rifat Jalil, the chairperson of First National Financial Corporation, Mr. Abdullah Zakaria, head of Pension Supervision Department from Capital Market Development Authority, Mr. Abdullah Hassan, debt management expert in the Ministry of Finance, Mr. Ibrahim Shaugi, manager Islamic Finance from the Maldives Monetary Authority, and Mr. Ahmad Nazir, deputy manager from the same institution. We appreciate your contribution in making this event technically intensified. Our special thanks goes to our event partners for their immense support in organizing this event. Bank of Maldives, celebrating its 40th anniversary this year, has supported us as the main sponsor, followed by Maldives Islamic Bank and Maldives Finance Leasing Company as the co-sponsor, while Mauritius Commercial Bank and Housing Development Finance Corporation emerged as associate partners together with Maldives Monetary Authority and Capital Market Development Authority. We have also got Ooredoo as the telecom partner, Public Service Media as the media partner, and Adat as the online news partner. Thank you all for your continued support. This forum is a result of an excellent teamwork of the Pension Office. We appreciate the guidance of our board members, led by the chairperson, Dr. Inas. We acknowledge the direction of our executive management, led by our CEO, Ms. Sujata Halim. We observe that the entire senior management always join hands with everyone in the Pension Office tirelessly to accomplish the mission. Thank you, my colleagues. I'm confident that the ideas and views expressed in this forum will eventually find its place in the development of the financial infrastructure in the Maldives. Thank you to all the participants for investing your time with us today. Inshallah, we hope to see you next year in the Finance Forum 2023 as a new addition to our own series. May Allah subhanahu wa ta'ala bless you all. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Shahid. This brings us to the end of today's event.
Refreshments will be served outside this hall. Also, please note that the departure time to Mali is at 4:30. Once again, thank you all for being part of the Maldives Finance Forum 2022. We truly appreciate it.
Thank you.
Thank you.